All right, what is going on, everybody? Looks like we are live. Let me know in the chat whether you can see and hear me okay. You guys see and hear me okay? Make sure the tech is working. All right, we're starting to see some comments come into the chat. Looks like we got some people joining. Happy 250th Independence Day weekend. Um Markets were closed today, so unfortunately for all of us who maybe are somewhat addicted to checking prices and placing trades and looking at our investments. Unfortunately, today was a bit of a boring day, but it's good to get some time off, good to get some relaxation from the markets. That's what Bitcoin's for anyway, right? Trades 24/7. Over the last 250 years, it's kind of funny, maybe not funny. The form of government has not really changed in terms of like the structure. Like it's still, the laws are somewhat loosely based on the US Constitution. Um, but in practice, it has actually changed a lot. This is I sent out a an issue to my newsletter uh, Wednesday this week. There's an old like a cycle of government. I think it's called anacyclosis, something like that. Described by Polybius. He was a Greek philosopher that he was like 200 BC, and he talked about how governments typically went from like monarch to tyrant, then to aristocracy, then to oligarchy, from oligarchy to democracy, and then from democracy to mob rule, and then back to monarch. Um, and when you look at like this, the way that that has played out with the United States, it actually matches pretty closely. Very interesting. So obviously started off as colonies of England. That was monarchy that descended into tyranny. Revolutionary War happened, and a lot of people think, oh well, we established a democracy, and it was like not really. Um, it was really an aristocracy at the beginning. When you look at even like who could vote, basically like white male landowners, and then the people who were actually in power, um, it was very few, and they were considered the wisest people who ruled and made laws and stuff for the common good of everybody. And it was in function a lot more of a republic. And then from there, it descended into an oligarchy. You got the rise of the the giants of the Industrial Revolution, the so-called robber barons, the establishment of the Federal Reserve, um, and then from there moved into, again, still didn't really change the overall structure. There was no like abolishment of the structure of the government. Is just in practice it changed, moved from there into a lot more of a straight democracy with pretty much everybody getting voting rights. A lot more of a democratic push over the course of, I would say, like the early to late 1900s. And then for the past probably 50 years, it's kind of evolved from there into more of a mob rule, more of a 51% voting to take what they want from the 49%, two wolves and a sheep voting on what to have for dinner. And that's why you see so much on both sides of the political aisle right now. Everybody wants, not everybody, a lot of people um, naively think that the solution is we need to get rid of the bureaucracy. We need somebody who can just go in and take control and just make decisions and make things happen, um, that would be for the good of everybody. That there wouldn't be so much political gridlock. Somebody who could just say, "This is the way it's got to be done. This is what we're going to do," and they don't realize it, but they're asking for a tyrant. They think they're asking for a good monarch, but they think they're asking, but they're really asking for a tyrant. It's kind of like I don't know if you ever saw, you guys probably didn't. Like, I think everybody saw Star Wars, the episode two, when I think it was episode two. Anakin Skywalker's talking to Padme, and he's like, "We just need to get rid of all this bureaucracy. We need somebody who just um, has the power to do whatever everybody wants." And she says, like, it sounds an awful lot like what does she say? An awful lot like tyranny or dictatorship or something like that. And he's like, "Well, if it works." And unfortunately, that's the sentiment that a lot of people have today, both on the left and the right. And the problem is, you think that your strong man is going to get in there and be on your side. Nine times out of 10, they're not. But the problem is, what happens when that power goes to your enemy? Because eventually it will. So you got to be careful with how much power you give to the person who you think is on your side, because eventually it'll be used against you. So, um, all right. Looks like we don't have any questions coming in through the chat. There's one: thoughts on HARP earthquakes in Venezuela, oil implications. So far, the market does not seem like it is um, anticipating any implications for the price of oil. Obviously, what happened in Venezuela, the earthquakes and the damage and the injuries and the lives lost. I mean, it's obviously terrible. Um, but if you're asking specifically about oil, it doesn't look like the market is really that concerned about it. All right, question from Slapmore1. Would you consider going into consumer stocks like Celsius and Elf Beauty? Celsius, CELH. Um, Maybe. So this is like when you're there. There's a question of like, okay, well, depending on what's going on in the economy, sometimes certain industries or sectors, certain categories of investments tend to do better. And so then you say, okay, well, does that mean that I could just pick any stock in that sector or industry? And usually the answer is is a resounding no. Just because you nail the industry or the sector does not mean that the stock that you pick is going to do well. So when you look at a company like Celsius, number one, this chart looks, it doesn't look terrible, like terrible from a long-term standpoint. We've got this this rising trend line here that we're bouncing off of. But we do have a lot of shorter term bad momentum to the downside. We had this big peak and then massive crash. It tried to recover and just couldn't. Um, and so we've got this really large wedge forming here. Usually these are directionally agnostic formations, which means whichever side you get the breakout from is where the stock will tend to have a pretty violent move. So if we do break out to the upside, then that would be fairly bullish. If we break out to the downside, that would be fairly bearish. But overall, stock like this is not like you're not seeing any good indication, bullish or bearish either way. And especially when you compare it to like, I would say its strongest competitor, Monster. Why would you pick Celsius when Monster exists? I mean, they essentially sell the exact same product, but one of these companies, I mean, Monster, if you go back to 19, I think 1990 through 2020, maybe it was 1995 through 2025, but somewhere in that time frame is like a 20-year or a 30-year time frame. It was the best performing stock of all stocks. Outperformed Nvidia, outperformed like literally everything. And most people don't think about a stock like Monster. Like, how could just a random little energy drink company do so well? And they're just, for lack of a better word, they're monsters. They're they're beasts. Like the people who run Monster, they know what they're doing. Um, and and so in my opinion, it's like if you're gonna choose between a company that has been really, really struggling, they're currently trading at the exact same price they were back in October of 2021, or you could choose basically the exact same product, where back in 2021, they are currently up from that same point. If we were looking at Celsius, where's October 2021 was right there. They're up 126, 129% in that same time frame. It's like I'd probably want to place my bets on the stronger, faster horse. So doesn't necessarily mean anything about the Celsius performance is really not a an indication of the industry or the sector. I'm just saying that if you had to pick between the two, like sometimes there are way stronger companies, and you're like, yeah, well, Monster's already had its move. Maybe Celsius is next, and it's like maybe, or maybe they're just a much worse company, and they don't know how to perform compared to the others, compared to their competitors. All right. From Slapmore, do you think that the price of gold will rise if America revalues their physical gold stock? And does buying physical gold actually move the price of gold, or is it only paper gold that do? So first part of that question, do you think the price of gold will rise if America revalues their gold? Absolutely not. Won't have any impact whatsoever. So gold revaluation, 99 times out of 100, it's called marking to market, which means like on their balance sheet right now, it says that they own a certain amount of gold, and it says legally that the value of that gold is $43 per ounce. Obviously, gold is worth way more than $43 per ounce. That's like 1,000 times that, or 100 times that. And so the gold revaluation would simply be an accounting entry that says, hey, the gold that we own is actually worth what it's worth on the open market. Now, the only reason why they would ever do that is because it's a tool that allows them to print more money. That's the only reason why governments ever revalue gold. And so because of the gold certificates being held at the Federal Reserve, they have to swap out the old certificates for the new certificates that show the new current value. And because of double entry accounting, they cannot do that without also having a debit to show that the offsetting of that credit. And so the Federal Reserve would have to print roughly $1 trillion and credit that to the Treasury's account in order to compensate for the higher value of the gold certificates that they just received. If none of that makes sense, doesn't really matter. It's just an accounting trick so they can say, hey, gold is worth more, so we're going to print money to come up for the difference between what we said it was worth then and what we say it's worth now. That's all gold revaluation does. It's just money printing. So from that perspective, you might say, okay, well, that could have an impact on the price of gold going up just because it's inflationary, and sure, but the gold revaluation by itself doesn't do anything. Then you say, okay, well, what if they say they're not just marking it to market, they're saying we're revaluing gold and saying it's worth $10,000 or $20,000 an ounce. It's like, okay, but it's not. And so it doesn't matter what the US government says the value of gold is. Right now, the US government says the value of gold is $43 an ounce. However, it's trading for $4,000 an ounce. So it doesn't matter what a government legally declares the value of something to be. It's very clearly a different value. So it doesn't matter if they come out and say, hey, gold is valued much, much higher. It's not going to move the overall price of gold. Buying physical gold, does it actually move the price of gold? If sellers are not willing to accept a lower price and buyers are willing to pay a higher price, that's what changes the price up. Um, Anytime a transaction happens, there's both a buyer and a seller. And so the only time the price will move up or down is when the best buyer and the best seller agree on a different price than what it's currently trading at. Um, and paper gold has the right to get physical delivery. And so paper gold trading does move the price of gold. All right, from Crypto Ibrahim. I watched your last video about the dollar and it made me tedious to gold and silver. Maybe you don't mean tedious. Because last couple of months, gold, silver, and DXY has reverse correlation. Has even continued good thinking. Oh, man. Sorry, I'm trying to figure out what you mean by that. Okay, so you must be asking just about, like, should we invest in gold and silver if the dollar is going to go up? And the DXY is simply the dollar measured against other currencies. So gold and the DXY, they can both rise at the exact same time because the dollar can get more valuable relative to other currencies while gold gets more valuable relative to the dollar. So just because DXY is going up does not mean gold and silver have to go down. They're not tied together intrinsically. I buy gold dollar cost average constantly, regardless, because it operates as a savings account. So whether we have inflation, deflation, or something in between, the purchasing power of gold stays stable over long periods of time. So for me, gold is my savings account. It's the reserves portion of my portfolio. And so I'm not really looking to actively trade it. Every once in a while, I'll buy some calls on GLD. I'll buy some puts on GLD just because, like, there might be a good opportunity for a little short-term trade. But for the most part, I'm just stacking gold. All right, from Eric Saltrokes. Do you think the AI stock sell-off is over? And do you think this is a good entry point? It depends on the stocks that you're talking about. This is kind of what I was alluding to earlier when we were talking about Monster versus Celsius. It depends on the stock. And so when you say the AI stock sell-off, you might be talking about software stocks. And so if we take a look at software stocks like ServiceNow, I would say it's probably a great place to enter. If you look at other stocks like Palo Alto, I mean that's a big run. It'd be hard, probably difficult to see another massive move just like that from here. When you look at other stocks like Adobe, I don't know. That looks like a very dangerous stock to me. It's like, yeah, they're still making money, but insiders are not buying Adobe right now. They're the CEO is going to be stepping down. They've got I don't know. Market is pricing in a very large chance that Adobe is not able to continue making the same amount of money they're making right now into the future. And so it depends on the stock that you're looking at. Now, if you're looking at like memory stocks, we've gotten a pretty good pullback. If they're able to maintain the expectations that the market is placing on them, then yeah, I think they probably have more to run. In my trading group, we did exit our position in DRAM. Just by coincidence, we exited it on June 22nd. Happened to be what I think is going to be a local top. I don't think it's going to be the top, but we did exit our position there just because it hit our price target. Not because it looked like a local top, just because it hit our price target. And so I don't currently have exposure to stocks like Micron for any significant trade, SanDisk, but looks like a good pullback. But who knows? That parabolic run might be over now. That might be, fully valued. And right now, the incentive for somebody else to come in and try and start ramping up production, the incentive that like companies like Apple have to try and crush Micron for like Apple has never had to raise its prices like they just recently did. And you can bet your bottom dollar that they are out for blood. Um, back when there was a big memory glut back in 20, I believe it was like 2023. It was like during this time, Apple was putting a lot of pressure on Micron. They were not allowing them to like, get good deals or anything. They were trying to pay as little as possible, and they were just, abusing and taking advantage of them. So that's why Micron has like, they're not playing ball. They're not playing nice. They're like, no, we're just going to capitalize and we're going to squeeze every dollar out of this as we can. And now Apple's, I mean, their stock prices started to rise recently, but in terms of like their pricing, they've never done what they recently did, which is jacked up the prices of pretty much all their products across the board by a significant amount because memory costs have gone up so much. They have many products that are completely sold out that you can't even buy because, again, the memory shortage. They've delayed products because, again, the memory shortage. And so Apple is going to be out for blood. They do not just they're not just going to sit by and just play this game. Who knows how they're going to deal with it? But over the next couple of years, I would not be surprised to see some very big moves from players like Apple and others to try and put put Micron and other companies like this in the ground. We'll see. We'll see who ends up winning. But anyway, overall, the indexes are still holding up, even though you've got many stocks in the indexes that are doing terribly. The overall market is still showing a lot of resiliency. And July tends to be a very good month in the market. All right, let's see here. Red Sly Fox says, I question people who would rather drink Monster than an iced latte. A lot of people do not like the flavor of coffee. On top of that, in order, like you said, a latte, there's a lot of fat in a latte. And so a lot of people prefer zero sugar, zero fat, and more caffeine. Um, White Monsters are one of the most popular drinks, and they're 0 calories, zero sugars, um, basically just caffeine plus artificial sweeteners and artificial flavors. And so, some people like iced lattes, but again, because of the sugar in a lot of lattes, and then also the fat and the flavor, a lot of people don't prefer that. All right. From Darren Tobias, is the Russell reconstitution waiting over? Yeah, I think it happened a couple of days ago. It's completely done now, I believe. I think that the selling and then the rebuying of the new companies in the indexes is done now. Thoughts on REMX ETF? I like it. We're currently long that in one of my trading programs. Rare earth and strategic minerals ETF. I do like it a lot. It looks like a very good setup with a big bull run, some price consolidation. Now we're playing with that 200-day moving average here, and we're playing with support as well. So this is an area to watch, but longer term looks like a bullish setup and the fundamentals as well. I like the stuff that's inside of REMX. We've got pull up the holdings. We've got a lot of companies that you just can't buy. They're, on other exchanges, they don't have like ADRs trading here or anything like that. So you get exposure to a lot of companies that you just can't if you're just trading individual stocks. We've got ALB, PLS, MP. So we've got a lot of companies in there that I think are poised to do well over the near term. From Slapmore, I won't recommend Adobe, but ServiceNow and Salesforce seem cool. Salesforce is one of those companies that I'm always torn about because it's a rule of thumb, and this is not a like an iron law, but it's a useful it's just a useful rule of thumb. It's like if you despise a company or its leadership or its products, um, usually that's going to be a company that's going to have a hard time performing well because if they've done something, it's a company. Like it's not like a relationship or a friend or a person. So if a company is able to do things that make a random individual like despise them, really dislike their products, like actively want them to not succeed, um, you've got to be doing things wrong as a business. And so that can be a little, not a little, it can be a big red flag that says, hey, like, even if this company has been performing well, there's a good chance that it's like there's stuff going wrong that's going to make them suffer in the future. And vice versa. If a company is able to get like a massive cult following where people love spending time and money at this business, it's like um that's a very difficult thing to do. And if you're able to get over that high bar and you have people that like make your company like their personality and love it when you release new products and just want to spend as much money with you as possible. Like that's, you got companies that have like raving fans and like a cult following. It's a pretty good sign that they're going the right direction. Salesforce seems like a company that is ripe for disruption. Leadership that is not really very well liked. Um, However, they do have some products that are like really good. Like I would say Slack is in that, and unfortunately, they own Slack, but that's like a really good product. Um, so so yeah, I'm torn on Salesforce. I don't have a position, long or short. Um, I don't like I don't like Mark Benioff. Is that how you pronounce his name? All right, let's see. From Chipskind7. Question: based on your last video, if the dollar is strengthening, why is inflation still at 4%? Wouldn't inflation be negative if the dollar is strengthening? Nope. Dollar going up just means the dollar is getting more valuable relative to the other currencies in that basket. It does not mean that the dollar is getting more valuable relative to goods and services. So you can have a rising dollar and rising inflation at the same time. All right, from Volga Vanna White. Do you think the article about Meta planning to sell extra AI compute is legit? It crashed data center stocks. I think in the future it's probably legit. I think they just looked at other players and they were like, you know what? We need to do something that's gonna like help out our stock. And so they announced that. I don't think that there is good evidence of excess compute. Otherwise, you wouldn't see like Amazon being able to raise prices by like 20% on 6-year-old chips. It's like the A100s or the H100s. They're raising prices by like 20%. You wouldn't really be able to see that if there was so much excess compute out there that Meta just has so much extra capacity. They're like, we're going to start selling it. I think they're looking at what SpaceX is doing. They're looking at what Amazon did a long time ago, and they're like, hey, we need to move into the space. So I think it's more of a signal about where they're trying to go in the future, not necessarily any indication of the current reality and the current state of things. All right, from ND Studios. Hey, in general, do you think the upturn in the market economy recently is part of the boom bust cycle, or do you think things are truly recovering? And then any suggestions to hedge defensive long term? Unfortunately, when you have fiat currency, everything is the boom bust cycle. um, because when you have a fiat currency, it is a constantly changing supply, relative, well, just in absolute terms, and then also relative to the rest of the economy as well. And so the only way you could say definitively that hey, this is pure absolute recovery or pure absolute downturn would be if the currency supply was locked, solid, and couldn't change. Then everything else, all prices are pure signal, because they represent what is actually happening in the free market. But when you have a fiat currency, a floating supply that can increase or decrease, um, it dilutes or completely obscures that signal. Um, and so from 2022 through about 2025, let me pull up the chart. I don't want to say say these numbers off the top of my head. Let's just pull up the actual chart. Okay. From April 2022 through October 2023, the money supply was decreasing. So it bottomed out in October of 2023, topped out in April of 2022. So the money supply was decreasing, and there's a lag effect to this. And so as the liquidity in the system kind of shrank over the following, I would say probably year and a half, that worked its way throughout the economy. But that is not what's been happening recently. Ever since then, the money supply has been increasing. And if you look at this as a percentage change from the prior year, we can see that not only has the money supply been increasing, but the percentage, the pace at which the money supply has been increasing has been going up, especially recently. So the money supply as of this last month has been expanding at an annual 5.5% pace, which is more than it was expanding last year at 4.5%, more than it was expanding, back in 2024, which was 1 to 2% to 3%. And so not only is the money supply increasing, but the pace at which it's increasing is increasing. and so we are moving from a very tight, financial conditions into a period of time where we're going to have a lot more easier financial and more liquidity. So this is, I think there's certainly real economic recovery that is happening, but again, that signal is obscured and diluted by what's going on with the money supply. And so, yeah, this is at least somewhat part of a monetary credit expansion fueled boom. And I think it'll last longer than people expect it to. But booms that are caused by credit expansion end in busts caused by credit contraction. All right. Farmer George, what is your guess on where LeBron plays next season? I would like to see him with the Golden State Warriors. No, I don't have any guess at all. I don't really follow basketball at all. I only said that because the recent management decision by Iron, which we are long in my trading group. They just recently decided to spend a bunch of money on a sponsorship on the Golden State Warriors, which seems like one of the stupidest decisions on how to spend money for a data center company. But maybe, I don't know, they get somebody like LeBron that brings more eyeballs to that, and it makes it somewhat worth it. I don't know. All right, let's see here. Next question. How much Bitcoin did you buy this week? Let me tell you. Let's see. Because I always buy Bitcoin. I don't trade it. I don't sell it. I just dollar cost average. I buy every single day. So, this week I've purchased a little over $2,000 worth of Bitcoin. All right. Let's see here. Are jobs numbers at some point going to become irrelevant? The entire economy is for the top 20%. Are we entering a new paradigm where the current ways of gauging the economy no longer work? I think the way that the data is collected matters. I don't have a lot of confidence that the way that the government collects the data is super useful or helpful. Partly because, like, if you look at the different surveys, like one of the surveys, the main one that people look at just counts like the number of employees. So if you've got somebody who works part-time at Taco Bell and then part-time at McDonald's and then part-time at Wendy's and they've got 3 part-time jobs, that looks like 3 jobs in the economy. But it's the same person that's just working multiple jobs. And so the household survey I think is a lot more useful because that just looks at the number of people who have jobs, and so you're not triple or double counting people. But even that, I don't think is as useful today because of the trend, especially with younger people, to just try and work for themselves. And there are ways that they try and make sure that those people are counted. I don't think the data collection is sophisticated enough to fully take account for that. So I it looks like one of the things that the new Federal Reserve Chairman Kevin Warsh, he came in and he said, "Hey, we've got a task force set up for these 5 or 6 different things," and one of them was data collection. They want to make sure that they're collecting data correctly, accurately, up to date. Like they want more data sources that are more accurate, more up to date, more real time, and pulling from a lot more places rather than just like phone surveys. Like who when have you ever gotten a phone call from somebody in the government asking you about like, oh, hey, if you were to rent your house today, how much could you rent your house out for? And then they just write that down as if that's like owner's equivalent rent, if that has any real bearing on what's going on in the economy. So I think that there's a good chance that we start to see some better data. Third party private sources of data collection already do this. And so like one example is they're going to try and change the way that they measure inflation. Well, there are third party measures of inflation like trueflation. Let me pull it up for you. What's going on? All right, here we go. Trueflation is showing inflation at 1.8%. And it's not like it's constantly underreporting. When you look back at 2022, it topped out at 11.5%, which was more than what the BLS was showing. Um, and so there's a very real chance that the upgraded um, data collection that the Federal Reserve, if they actually go through and do that, they're going to start reporting pretty different numbers than what people have gotten used to. And that could include jobs as well. All right, from Newts and Glenn. Thoughts on using covered call ETF dividends to purchase in-kind underlying position. Sell the volatility, buy a covered call fund into dollar cost average into a long-term one. Example, buying KGLD and then putting the dividends into PHYS. I am not a fan of covered call ETFs because the way that ETFs work, I looked into a couple times. Um, Starting my own ETF. And the main reason why I never did is because the rules about how you can manage assets inside of an ETF are so strict that it's basically impossible to use discretion. And so if you're going to do something like a covered call strategy, it has to be so systematized that you end up locking yourself into poor performance. You end up selling calls at at times where you really shouldn't be. Then you lose the shares, sometimes at a loss. You have to rebuy. It's just they never outperform the underlying, even including the dividends. So let's take a look at this one because every time somebody brings a covered call or a structured income ETF up, like to my attention, we pull it up and we see like maybe this one will be the one that outperforms the underlying. So KGLD, KGLD, Crew of Gold Enhanced Income ETF. All right, so we're going to hit this adjust button because that adjusts it for the dividends because the dividend yield on this one is 15%. And then what we're going to do is we're going to compare that to GLD over the exact same time frame. Now, this one is brand new, so this one might currently be outperforming because it's just so new. No, look at that. Even with the dividends, GLD is up 24.32% over this time frame, and KGLD is up 23.27%. So that's basically the same. But again, It's not outperforming. It is very slightly underperforming, and over time, that underperformance will compound, and you'll see GLD just continue to do better and better compared to KGLD. Again, even including the dividends. That's what I have on here. When you don't include the dividends, it looks like this. So you do have to include the dividends to see the true performance measure. Otherwise, it looks like GLD is just slaughtering it because it's not taking into account the dividends. So what I usually say is a better choice is to learn how to sell covered calls yourself. It's not that complicated. It's a very simple strategy, and you sell calls when it's a good time to sell calls. And you don't sell calls when it's not a good time to sell calls. That way you never risk losing your shares at a loss. You're selling when there's decent premium to take advantage of, and you use some discretion. Um, and then would not be a bad idea at all to take those dividends and the income that you're producing from the from selling calls yourself, and then using that to buy more shares of the underlying. No problem at all with that. So it's not really necessarily a problem with the strategy. It's just covered call ETFs themselves are regulated in such a way that makes them underperform the underlying 11 times out of 10. All right, let's see here. From Sergio, question: what type of physical silver do you stack? Um, I don't just okay, so this is a personal thing. When you're considering what type of gold or silver to buy, you can buy ETFs, you can buy gold in a vault somewhere, you can buy physical gold and hold it yourself. There's pros and cons to everything. So don't believe the lie that people say that one way is just always better than another. There's always a trade-off, there's always a cost. And so you always have to consider which costs or risks you want to assume based on your situation. Personally, I think it's too easy these days for people to find out where you live. And if I was going on YouTube every day, a couple times a week, and saying, "Hey, I stack a bunch of physical gold and physical silver and I keep it at home in a safe," I think that would put my family in danger. And so I don't personally keep any physical gold or silver because I don't think it's worth the risk. Now, if I was a nobody, if I was anonymous completely and I lived, far away and, off grid, whatever, and I was like, this is the safest place for it, then sure, that makes a ton of sense. Some people travel a lot. Some people live in apartments. Some people like whatever is it like their situation is not set up where it would be a wise choice for them to take on the risks of getting it stolen and putting their lives or the lives of their family members in danger for it. And so I don't store any physical gold. I store a lot of physical lead and a lot of copper, but I don't store any physical gold or any physical silver. Um, and so I prefer to stack in private vaults for the most part. I do some GLD and that kind of stuff and some trading, but I like physical vaults. I like physical gold in vaults that are in countries that have no history of confiscation. America confiscated all of America's gold, and then they confiscated the rest of the world's gold. So I don't like storing gold in vaults in America because if push comes to shove and they ever do try and do a repeat of that and just nationalize gold ownership and take it all, then they're going to go to the vaults in America. That's where most of the gold is. So I don't want to keep it there. Um, I also want to keep it in a private vault. I don't want to keep it in a vault that's owned by a government because again, if nationalization happens for whatever reason, they're going to go to the government vault. So I don't want to keep it in the Bank of England or anything like that. So private vaults in countries with no history of confiscation. And then you also want to make sure you're looking at things like that it's segregated, allocated, segregated, insured, and that you can take physical delivery anytime you want. And so, but also I don't really purchase a ton of silver relative, like I purchase way more gold than silver. Silver is more of a trade for me, not like it's not money. It's an industrial metal. 99% of its value comes from its industrial usefulness. I'm bullish on it for the long term right now, but it doesn't preserve its purchasing power like gold does. Okay. Next question from Sergio, can you look at SOC and see if there are any option strategies you might apply? Sable offshore. Oof. That doesn't look bullish. That looks very bearish. So right at the start, I'm not be doing any bullish strategies. Um, Lots of downward momentum, big gap down, and then it's holding underneath previous support as new resistance. I would be willing to bet that there's probably not a good way to profit off of this with options because it's a $4 stock right now. I would imagine that any puts for any length of time, the next, 3 months plus, they're probably going to be fairly expensive again considering the fact that it's just had this big huge drop. Puts are probably going to be fairly expensive on this. Um to the point where it's like you probably don't have that much upside. Even if you buy like a $2 put, the most that that could ever be worth is $2. And I bet you're going to probably be paying like 50 cents minimum, maybe a dollar for that, depending on the time frame that you're looking at. So there's probably not a huge profit potential there. Now, if you want to buy a lottery ticket, that's very unlikely and bet on a turnaround here, then I bet you the calls are super cheap. But you better have a really good reason for thinking that this thing is gonna go up, after everything that it's been doing. It's not just the technicals. Technicals are just a visual representation of the fundamentals, and they've just been getting slaughtered with their earnings quarter after quarter after quarter. So, it doesn't look just at first glance, I don't know anything about this company, but it doesn't look like unreasonable that the stock price has fallen off a cliff like this. All right, from TapRack. When doing annual reallocation, do you reallocate the same way in a tax advantage account and your taxable account, or do you stay away conservative in one and aggressive in the other? So I this is one of those areas where I think it's you have to make up your own mind about this and it depends on your own situation. I would say probably 90% of people, you want to get as much money into a tax deferred or tax free growth account as possible, whether that's a 401k, an IRA, anything like that. Um, there are, for a number of reasons, I have almost nothing in in anything other than taxable accounts. Um, One reason is because of the optionality that that allows, the freedom. Um, there, I think there's a fairly good chance that well before I'm 60, 65, 59 and a half, well before then, w- I may no longer be in the United States. And having a huge tax bill, on an exit tax on something that, has and plus penalties, to be able to, take a good chunk of wealth out of a tax advantage account like that is a fairly big disincentive, that might persuade me to do something different than what would be best for my family and my wealth. Right now, we don't have any plans to do anything like that, but if you just, give there's a good enough chance where I think personally, I prefer to keep everything free and not locked up. Again, there's a big tax bill for that, like, because you have to pay taxes on the gains along the way. So it's not something that I'm necessarily saying is a recommendation. But also the other thing is, like, for entrepreneurs, a lot of times, like, having access to it and the liquidity for it is something that periodically becomes extremely useful. And having that locked away may prevent you from being able to do things with your business that you wanted to do. Um, like, if I had everything locked away in a retirement account, I may have never been able to quit my job and start Heresy Financial in the first place. So, um, So yeah, I think it's a personal decision. I think again, for probably 90% of people, it makes more sense to use IRAs and 401ks and Roth accounts and HSAs as much as you possibly can. Um, Personally, I value the freedom and the access and the liquidity more than that. All right. Let's see here. From I want to be a cowboy, how do we protect our Roth IRA or anything if the USA turns commie? You can't. You don't. Um, that which the government giveth, the government can taketh away. So they give you tax advantages inside of specific accounts like Roth. They can take it away. Now, I would guess that if anything happens to a Roth, the most that would happen in the next 20 years or so would be taxes on the gains. Again, no taxes on the contributions because you've already paid them, but taxing the gains when they come out as ordinary income, I could absolutely see that happening within the next 20 years or so. Um, so yeah, no, if the United States decides to try and do something like that, there's nothing you can do. That which Uncle Sam giveth, Uncle Sam can taketh away. All right. Can you please look at Cardano? No, I don't like any crypto other than Bitcoin. Um, so I don't even have to look at it. I think Cardano is going to zero. All right. Sergio, selling cash secured equity puts on SOC at $4 looks decent. Yeah, because the entire market is betting that that company is going to zero. And so how much are you going to get by selling a put on that company? You have to say, okay, is that worth owning the shares at 4 and then the shares being worth 0? Um, so maybe that bet is worth it to you. You say, okay, if I can repeat this strategy for the next 6 months or next year, then I have a free position, and I can potentially keep on doing that, and it doesn't matter if it goes to 0 after that. But the market is probably pricing in that company going very close to 0, which is why those CSEPs look so good. Okay, let's see here. From Sergio, when civil war in US, you blackpilled like Porter Stansberry. I have a different view on patriotism than I think probably a lot of people do. The American ideal, the American spirit, the American way of life, and the American dream is for for 400 years is go where you are treated best, go where there's the most opportunity. It's literally why all the pilgrims, the settlers, the colonists came over here in the first place because there was better opportunity where they were going to be treated better. It's why every immigrant for the last 250 years has decided to immigrate to the United States because they were leaving a place that was treating them worse and going to a place that was treating them better with better opportunity. That's how 99% of us got here, because either us or our parents or our grandparents or our great grandparents or somewhere back along in the last couple hundred years decided, hey, the place that I'm at right now is not the best place for me and my family. I'm going to go to the best place for me and my family. That's the true American spirit. So the moment the United States no longer represents the best place for me and my family, I'm going to be a true American. I'm going to go somewhere else. That's what I think it means to be patriotic. Not just to love a place simply because of your like random universal lottery luck just happened to be born there. that has no relevance on anything. Who cares where you were born? Um, why would you be proud of a place just because you were born there? Like it doesn't make any sense logically. You would be proud of a place if you choose to be there. And so the moment that the United States is no longer the best place to be, all things considered, obviously there's trade-offs, doesn't mean it's best in every area. Um, then the most American thing to do would be to go somewhere else where it is the best. What country are you considering moving to? Again, this is a long-term thing way down the road. I This is not something that I am actively planning right now. I'm planting seeds. In other words, like I have things in the works so that if push comes to shove later on, that I've laid the pavement, I've done the groundwork so we can leave if we ever need to. But I have no plans, like I have no country picked out or anything like that. There's no I don't currently have like a place where I'm planning to go. Um, and I actually don't expect that it will ever come to that either. Um, but there's always the chance, whether it's civil war or communism or whatever it ends up being. Um, you just want to be prepared just in case. All right. From Michael Christie, you mentioned that you don't use traditional health insurance anymore and that you likely use crowd health. How's your experience been? Well, when I started Heresy Financial, I did not have any health insurance for the first, I don't know, probably 2 years. And we realized, man, this is way cheaper, not just because we weren't paying for the health insurance, but like whenever like we took our kids in for like a health checkup or whatever, we said, hey, we're cash pay, no insurance. And it was cheaper than like a copay and then your bills that you get going through insurance across the board everywhere. And so then after a couple years, I was like, you know what? It's probably a good idea to get health insurance just in case, cancer or car accident or something like that. And and so we were paying, I don't know, $1,300 or $1,500 a month for insurance. And it was a high deductible plan anyway. It was not like I was trying to find the cheapest plan just for like catastrophic coverage only. And it was still like $1,300 a month or something like that. And and we still, because it was cheaper, we still every time we went in for a health checkup or whatever it was, and we don't go to the doctor that often. We're very healthy, but it still happens every time, time and again here and there. Like one time I broke my toe. I was doing the worm and kicked the ground too hard and I broke my toe. So little things like that, you got to go in. I still, every time we went in, we said, nope, we have no insurance. We're cash pay. And every time it was cheaper. Um, so then we discovered Crowd Health, and it's technically not insurance. Like legally, they can't call it insurance, but it operates like the exact same. It's just when somebody has like medical bills, it's covered by everybody else, like crowdfunding that payment. And so you have like it's not called a deductible, but it really is. Like when you sign up for your plan, you can either choose a low one or a high one. And if you choose a high one, then your monthly payment is lower. If you choose a low one, your monthly payment is higher. And because it's not insurance, you are still cash pay everywhere. So when you go somewhere, you say, "Hey, I'm cash pay only," and and because of that, they have like a whole system where they like tell you the best places. Like if you have to go in for something. Like the other day, I've got eye floaters, and I've had them my entire life, and so I wanted to go into an eye doctor to make sure that my retina wasn't tearing or something like that. And I didn't need surgery or whatever. That it was okay. So I went into the eye doctor, and normally they have this whole process where they're like, okay, you have to go to one doctor first, then get a recommendation to come into the specialist, and blah blah blah. I was like, I'm cash pay, no insurance. Like, here's a situation. They're like, okay, yeah, just come on in. So I got to skip that whole process, and um, and it was super easy, super quick, super convenient. And Crowd Health was the one who told me where they gave me the options. They're like, hey, here's the best places for cash pay for eye stuff. And so they've got a whole system for it. It's really great. And then I haven't experienced like an event where it's like, hey, we have medical bills that are way beyond our deductible. But from what I've seen, it's a very easy process. You just submit your receipts, and then they pay the money into your bank account to pay for those bills. And people have said like the coverage ratio of like getting paid for, paid out for the medical bills is like way better than traditional insurance in terms of like how often and like how good and how much they cover for that. So from what I've seen from other people who have used it for big medical bills, it works way better than regular insurance. But I haven't ever experienced that yet. All right, let's see here. From Bitcoin Hopper. Hey Joe, happy 4th, my friend. Thank you for all the education over the years and providing some of the best cheat codes, asymmetric alpha alerts, and breakout resource alerts. Awesome. Well, thank you for saying that. I appreciate it. Glad you're enjoying it. For those of you who don't know, that's my those are my private trading alert programs where I just share with you the trades that I'm making. From Sarichson, it's why we have 50 states and 50 options. That is the original design. However, the rise in power of the federal government over the last 250 years means that there is very little difference. There is still difference between the states, some, but very little difference. The original design was a bottom-up government. That's why in the Constitution, it says, here are the exact things, and here are the only things the federal government is allowed to do. Everything else belongs to the states. And over the last 250 years, that is flipped in interpretation. And now the federal government says, well, it's not explicitly banned by the Constitution. Therefore, as the federal government, we're allowed to do it. But really, it is explicitly banned because the Constitution says, hey, if we don't say you can do these things, federal government, you're not allowed to do these things. You're only allowed to do these things on this list. Anything else, any other laws, that belongs to the states. And by the way, here are the things that the states are not allowed to pass laws about. And so it's like the Constitution is a big like restriction on power. It's not like, hey, here's all the things that you can do to get more power. And so it was designed to be bottom up, where the states would have more power, and that way you could choose to completely change your life and your opportunities in the structure of government and all that by just going from one state to the next. It'd be a very easy move. But unfortunately, we live in a top down government structure now. The federal government has way more power than the states, so there's not that much difference between from state to state. Okay. From Robert Reg. I still use your "What does the Bible say about investing" video when speaking about the American system. Thanks for your work. Well, thank you. I appreciate that. I'm glad that that video is still getting use. I should probably make a follow-up video to that. I think that most people, especially Christians, are, I would say, not brainwashed, just extremely ignorant or deceived about what the Bible actually says about wealth. Part of that is because most people don't understand what wealth is. Wealth is just goods and services. It's the stuff that people want and need. Money is not wealth. Money is the tool that is used to exchange wealth. So wealth is your time, it's your services, it's your products, it's your labor. It's the stuff that people want and need. Money is just the tool for how that stuff is exchanged. Because at the end of the day, money is just the most tradable good. It's the most saleable good. And so most people have most people are economically illiterate. And so when they see things about wealth, they just think, oh, this person is being selfish. But really, as long as you're not stealing, as long as you're not performing fraud, as long as you're not committing crime, as long as you're not violating somebody's rights, the only way to accumulate wealth is to give somebody else something that they want more than what they have to give up to get it. which is usually money, but it doesn't have to be money. So if I want to get wealthier, I have to give you something you want more than what you give up, which means by me getting wealthier, I'm making your life better. So the more wealthy I get, again, assuming there's no exploitation, assuming there's no fraud, assuming there's no crime, assuming there's no coercion, assuming there's no violation of rights, the only way for me to get really wealthy is to make a lot of people a lot better off, to improve the lives of many people by as much as possible. And on top of that, I have to consume a lot less than I produce, which means I'm storing away that wealth instead of redeeming it. In other words, exchanging it back into society for goods and services. And so it's like I'm giving society a lot of stuff that they want, and all that I'm taking in return is a bunch of IOUs that I have not exchanged. And so, in a very real way, the people, again, that are not violating rights, that accumulate a lot of wealth, are only doing that as a result of making the world a much better place and improving the lives of many, many people. There's nothing more biblical or Christian than that. Like, that is the command. It is go out into the world and make it a better place. And the one very easy way to measure that is how much wealth you've been able to create. All right. Let's see here. Can you speak about your offerings? This is from James Collier. Can you speak about your offerings? I see things on your website for like $9.99. Right now, don't buy anything from me. I am in the process of cleaning up my website and the pricing and everything right now. Starting on Monday, you're going to see all of my courses, my education is going free. That's stuff that I used to charge hundreds or thousands of dollars for. My education, I'm moving completely free, and you're going to start seeing that on Monday. The ability to do that is to get that is going to be linked in all my YouTube descriptions. The reason why I'm doing that is because today it is just too easy to find information and education for free that it's like, why would anybody pay for it? I also have not recently been selling my education at all. I've been including that as a free add-on bonus for my trading programs. And so a couple of years ago, I pivoted from selling my education to selling a membership, a subscription service to follow my trade alerts, because I was like, hey, look, I've got a really good trading track record. My overall performance, my compound annual growth rate for the last 6 years is 39%. So I've got a pretty good track record. And so I just started a trade alert service where I share the trades that I'm making with the people who follow me. And that became way more popular than me trying to sell courses and education. And so I haven't even been selling the courses for a long time. Those have been free bonuses in my trading program, but now I'm just splitting them out and I'm making them just freely accessible. So that's step one. My YouTube, Twitter, newsletter, education courses, that's all going to be free. From there, I sell my trading programs. Right now, I still only sell those through the events that I do, because I want to make sure that you understand the strategy and understand what you're getting into. And I also, because you should not be engaging in active trading or active investing until you have a significant portfolio. If you only have $1,000 to your name, you have no business actively investing or trading. Because even if you're really good at it and you make, 30% or 40%, you're doing that on $1,000, and it takes a lot of time and a lot of effort and really quite a while to get good at it. It makes way more sense in the beginning to focus all of your efforts on making more money and then saving and investing that money just in index funds to get your portfolio value large. Because once your portfolio value is bigger, then the same amount of effort and time that you spend on active investing and trading is done on a much larger amount. Same percentage is going to be a much larger dollar amount. And so it just doesn't make sense to do that until you have a large enough portfolio. And so that's why I've priced it so high. And I want to make sure everybody understands the strategy, understands that. So I don't sell access to my trading programs just like through, like you can't just like go onto my website and click on it and enroll. Right now I do that through my events. So if you ever hear me on YouTube say like, "Hey, I'm running this event. I'm going to talk about this thing," at the end, usually I'll give an opportunity to enroll my program as well. Um, so I would say right now, don't buy anything. Also, pretty soon in the future, because those trade alert programs are just they're option strategies, and so I'm going to be rolling out a um, stock only portfolio strategies as well. All right, let's see here. What other questions you guys have for me on this 250th Independence Day weekend? Hopefully, you guys are all enjoying. If you guys have a day off, holidays. It's funny. I've even when I had a job when I was a broker, I never knew when holidays were going to be. It happened all the time where I showed up and and the office was empty. And so that was usually a fun little surprise. And then I got to go home and have a surprise a surprise day with the family. Um, but now, you know, now it's even worse. I never know when a holiday is happening. My extended family or friends will be like, "Hey, what are you doing for this holiday or whatever?" I'm like, I did not know it was a holiday. A lot of times, the way that I find out is because I start looking at the markets. I'm like, what is happening here? Why is the price not changing? I'm like, oh, the market's closed. It must be a holiday. But I work other than like the main like Thanksgiving, Christmas. Um, Maybe those are the only two. I work pretty much every other holiday. But when you run your own business, like it's not like I'm like a workaholic. We take a lot of other time off when when we need and when we want to. So, how much is large enough for a portfolio? For your net worth, excluding your house, I personally think the bar to shoot for is 100 grand because then you have enough where you take a portion of that for active trading, like 10 or $20,000 of that for active trading, not the whole thing. Um, and then you have enough where that's actually going to make an impact on your overall portfolio. A lot of people like to start off when they hit 10 or $20,000. I think the larger the better, but it's a personal decision of yours. Just know that the larger your portfolio is when you start actively trading, assuming you give yourself enough time to learn how to do it well, or you follow me, then the more it's going to be worth it for you because the same percentage increase in performance is going to be a way larger dollar amount. Question from Bass 30. Thoughts on the housing market? I think there's a very good chance before the midterms there's some sort of executive action to try and push mortgage rates down. I don't think there will be like an executive order or something that will say, "Hey, mortgage rates by law are capped at 4% or anything like that." Um, but I do think there will be something to try and also, it might just be bank deregulation. If the supplementary leverage ratio is eliminated, banks will be able to purchase many more treasuries. Treasuries will not count against their risk limits, and so it'll open up their balance sheets to do private lending. There have already been a couple little moves towards that, like the move to make mortgage origination much easier for banks. A couple of months ago, the Federal Reserve published their initial move for public comment on that, and so it looks like that's the direction that they're trying to move. Ultimately, it's a supply and demand thing, and the Federal Reserve has been selling their mortgage-backed securities. Really, the only way to bring more mortgages down without direct government intervention would be deregulating the banks and allowing them to lend more. And I think that that's a very likely possibility in the next 5 months. Um, we've also already seen the median house price contract. Let me pull that up. median sale price of houses. So we've already seen, back in from 2007 through 2009, the median home sale price went down. I think it's like 20% or something. From the top in 2022 until now, it's down, I think, 10%, 442 to 403. Yeah, just about 10%. So we've already seen a classical correction in home prices here. So anybody who's betting on a collapse in home prices from here, you like you need fundamentals that don't exist right now. Like only half of homeowners have mortgages. And of those who do, like over a quarter of them have mortgages under 3%. Like 50% of them have mortgages under, I think, 4%. You just don't have the setup to have a big forced liquidation like you did back in the financial crisis. Not only that, but the demographics don't support it either. Like there are way fewer housing units per people who need a place to live today than there used to be. Um, and the only thing that could have changed that was mass deportations, which never happened. um, and so we just don't have the demographics to support a housing market collapse from here. The fact of the matter is people are not selling because they cannot afford to buy. And so the mortgage rates being high is what's stopping people from selling. They can't afford the next place if they leave their current place. So I'm bullish on US real estate, on single family housing. All right, let's see here. From Mini Stick Snipes, how do you know when to hedge? How should most people mitigate risk for hold for long-term investing? If you're long-term investing, and by long-term, like you're talking 10 years, 15 years, 20 years plus, it doesn't make a whole lot of sense to hedge unless it is like very, very, very obviously um, a, a massive bubble that's about to fall off of a cliff. And even then, the chances of you being right about that are still very, very small. And so the cost of hedging for a long-term investing portfolio usually is just a drag on performance. I prefer hedging as just part of my active trading account. So, certain periods of time, it's like, hey, it looks like the market is, tipping over right here, and we might be in for a 5% drawdown or a 10% drawdown. Might as well buy some puts on SPY for the next month or two. Um, Nothing that's going to come like really close to like hedging my overall portfolio. But it'll be a nice little boost in cash that I can use, um, roll over to the rest of my portfolio, have a little bit of dry powder from it. Indicators that I look for that are like the VIX being super low for a really long amount of really long period of time, the fear and greed index hitting greed for like extreme greed for like a good period of time. Huge, green weeks, like multiple weeks in a row, or even months in a row. Just overextended rallies. But again, nothing that's like big market crashes that last a long time happen specifically because nobody expects them to. So if you're expecting it to, you always have to assume that you are in the majority. That if you're thinking it, then A lot of people probably are as well. And when there's a lot of bearish sentiment, that's just fuel for the bull market to continue. All right. Um, from Adrian, what are your thoughts on what's been going on with Micron and DRAM right now? Burry is shorting it. People are very emotional over it. Michael Burry has shorted a lot of things that were not good shorts over the last 10 years. He's a good trader though. His performance is still got great performance. And so when you look at like let's say Micron, he's a pretty good trader. And so if Micron from here ends up doing like, let's see, if it goes down to like right here, and then it goes to like right here, and then it just moons again from there. Just hypothetically, let's say that's what it does. Then a lot of people are going to be like, oh, Michael Burry, you're an idiot. But if he shorted like right here and then he closed his shorts like right there, um, that's a 30% return on a trade. And so he's pretty good. And when you look at like his market calls of like when he's shorted things, that's how a lot of them have turned out. They've been like decent dips that go on, it then moves into a big rally from there, and everybody runs circles around him and says, "Oh, you're an idiot. Look, it wasn't over." But he a lot of times does time it well, and it just ends up being a little position like that. It's not something that is like, he's saying is going to go to zero. Um, I think there's an okay chance that the run in memory stocks is done now. There's also an okay chance that it's going to keep on going a lot higher. Me and my trading groups, we closed out our position in DRAM right here. It was just happened. It wasn't. It hit our price target, so it wasn't. We weren't trying to nail the top here. It just hit our price target. It happened to be the local top, so we did close out there. I think we entered right around here. It was like a month-long trade, so we had a good trade on that. So I'm not currently long or short memory stocks right now. From I Want to Be a Cowboy, do you think real estate prices will come down or go up if mortgage rates come down or deregulation happens? Oh, the prices will go up for sure, because so many people got locked into homes at 3.5%, 4% or way lower interest rates, and they want to move. They want to upgrade. They want the extra space, but they're looking at their mortgage rate right now. Their mortgage payment right now is 2,000 or 2,500 bucks. If they were to move into the exact same house today, their mortgage payment would be 4,000 bucks or 4,500 bucks. And so there are so many people who are just waiting for mortgage rates to come down so that they can buy the next place, which means they can afford a much higher price. It's just a matter of what the interest rate is. And so, and there are also a lot of people who have been sidelined since 2018, 2017, waiting for the crash that never happened. And when interest rates come down again, they'll be like, all right, well, if I'm ever going to buy, I'm going to have to do it now. And so there are a lot of buyers, especially like millennials, who are renters right now and who will be buyers if mortgage rates come down enough. So yeah, I think that's bullish for home prices. From Atlas 4225, all outside nations are de-dollarizing. Then why is the dollar rising? If all other nations were dumping their dollars, then the dollar would be going down versus other currencies. The dollar is going up versus other currencies. You want to see? Look at that. The dollar is going up versus other currencies. From the tariff stuff, it did dip down. It put in a nice rounded bottom, has been testing that support over and over again, finally broke through, tested that old resistance as new support again, and in my opinion, is headed much higher here. But ever since this year, the beginning of this year, the dollar is headed higher. The dollar right now is 5% higher than where it was at the beginning of this year. So if all other nations were actually de-dollarizing, the dollar would be going down versus other currencies, not up. So unfortunately, the data does not support that idea. All right, let's see here. Will the gold price be reset to a new gold price? How will this affect the gold market and economy? Um, Gold is priced by the free market, by buyers and sellers. Gold is not priced by governments. The US government currently says that gold is worth $43 an ounce, but gold is actually worth $4,000 an ounce. Governments do not control the price of gold. The price of gold is controlled by the market. Any time in the past where any government has tried to control the price of gold, they're able to legally enforce that price for a while until the free market forces break that legal price. It is not possible to legally enforce a certain price of anything long term. It always breaks. Um, so if the U.S. government does gold revaluation, all they're doing is saying, "Hey, we're just going to um, we're going to say that the gold that we own is worth what it's actually worth on the open market." And the only reason they'll do that is it gives them an excuse to print. It's a way to it's an accounting gimmick to print like $1 trillion. And it's only $1 trillion. And they owe the national debt's 39 trillion. They spend $7 trillion a year with $2 trillion deficits. So printing 1 trillion from gold revaluation doesn't solve their problems. So there's not really a big incentive for them to even do that. All right, let's see here. From Unknown YTX, what are your thoughts on QQQ or QQQM? Well, QQQ, NASDAQ, I like it. QQQM is what is the difference? Just the smaller version of QQQ? Why is it not even that much smaller? Usually the small versions are like a tenth of the price, not a half. Is that really it? The smaller version of QQQ invests in large domestic international stocks on the index. QQQM is marketed towards buy and hold investors. QQQ may be preferred for trading purposes. Is that just because of the volume? Maybe option availability is a lot lower as well. Huh. That's weird. Usually like SPYM is $87 per share versus SPY is like 700. So it's like a tenth. So usually the mini versions, just to make them more accessible, price per share, are like way smaller. It's weird that QQQM is like only half. Huh. Either way, sorry for that little tangent. I like the NASDAQ right now. It's one of my main indexes. Um, from Sumi dot Exports, how would you buy a house in the current economy? Um, well, so there are a couple of things. Like number one, for a personal residence, right now, if you look and you say, okay, well, I could rent or I could buy, your monthly cost of buying pretty much anywhere is going to be way higher than your monthly cost of renting. So the reason why you would buy instead is because you want to live in a neighborhood that doesn't have any rentals, or you want to like buy a house where they're not equivalent rentals, or because you want to like do stuff to the house. And so I've spent a stupid amount of money on the house, on my house, my personal residence. Like redid the kitchen, we redid the bathroom, we redid like everything. Like right now, we redo the backyard. It was um, like everything. Like as soon as we moved in, it started falling apart. Like literally, the house flooded, and like it was the bones were bad. But because of that, we're like, all right, well, if we're not just gonna redo it cheap, we're gonna make it what we want. So we wouldn't have been able to do that if we were renting. We also wouldn't have been able to do that if we didn't have money. And so if you are strapped for cash, you're not sure about your job, or you're just like, hey, I can't afford a mortgage in an area that we want to live in, but I could afford rent, then rent. There's literally no problem with that. You're going to save a ton of money. You're going to save the down payment. You're going to save, on the monthly payments. Like right now, that's great. You just want to make sure that you're just not blowing the rest of your budget. Like you're using those savings to invest. Because otherwise it's like, well, buying a house is like forced investment. Even if it doesn't end up being as good as, the S&P 500 or whatever, other investments, it's still a forced investment. It still forces you to build equity in a home that has long-term appreciation, and you're using leverage, a 30-year fixed rate mortgage. It's going to be pretty good compared to inflation over that period of time. And so for most people, it's like, if they go and rent, they're just going to blow the rest of their money instead of investing it. But yeah, right now renting, for the most part, you can rent for way cheaper than anything that you can buy. The problem is you also always are going to have somewhere to live, and over time rents will go up. If you buy someplace, your mortgage is locked in, assuming you don't continue to move and upgrade your house over time. But your rent will always continue to go up. So eventually, there's always going to be a tipping point where it makes more financial sense to buy, even though upfront it's a lot more expensive. Now, if you're talking about single family properties, you want like for rental, like investment properties, you're probably going to have to go out of state, because usually the places where you want to live are not the best places to buy an investment property. It's just going to be difficult, if not impossible, for you to cash flow. So you're probably going to want to go out of state. You're going to want to look at places where you can buy houses for like 150, $200,000. And you're probably going to have to put a decent chunk down, 20 or 30%, maybe a little bit more, in order to make it cash flow. But if you can make it cash flow, then like for me, like that's the cutoff. Like I'm going to buy in a good state with good landlord laws. I can rent it out for enough to be able to cover all my expenses and still cash flow even a little bit. Then I'm set forever, even if mortgage rates don't go down. If mortgage rates do go down, man, my cash flow is going to explode. Um, if mortgage rates go down and property prices go up, maybe I can even take some of that equity back out and my cash flow goes up as well. So right now it's like it's not a good it's not a good time to buy. It's like a bad time to buy, which means it's probably good, because eventually it's going to mean like you bought when it was hard, when everybody couldn't, and you're going to reap the rewards of that later. Like usually the best time to buy is when it's the worst time, when most people think it's the worst time. And people think it's the worst time because it is expensive right now. But if you wait until it's like really easy, everybody's going to be doing it. All right. Um, if old bonds age out and are not replaced by new currency, dollars are more scarce, making them more valuable. Um, yes. Yeah. So let's say the money supply right now from here stays constant and the money supply does not grow from here. As debt gets paid back, because debt matures, it gets paid back with interest. That sucks money out of circulation. So you can't like if they just stop producing new dollars, then what actually happens is the dollar supply actually goes down, because as that debt gets paid off, those dollars cease to exist, plus the interest that's paid alongside of that. And that makes dollars more valuable because there's less of them. that causes deflation. So that's why they always try to at least increase the money supply enough to make sure that the deflation doesn't happen. Otherwise, you enter into a deflationary death spiral when you have a big fiat currency system built on debt. Um, so the answer to your question is like, yes, that would happen, which is why they don't let that happen, which is why they keep on increasing the money supply, while the money supply keeps going up. From Dickster, 1652. Just wait till you get too old to maintain a house and you decide to sell and move into rental. You'll freak out when you see the tax bill for the sale. I mean, the first 500,000 of gains is tax free. So a lot of people are not going to have that. And even if they do, it's like your tax bill from the sale, your tax bill comes from gains. And so when you sell the property, you have a big chunk of money to pay the taxes from. And so I don't think it's wise to make decisions strictly based on future tax implications. You're letting the tax dog wag the investment tail. No, the tax tail wag the investment dog. Like, you're putting the cart before the horse. If you end up with a big tax bill for something, it's only because you made money. It's always better to end up with more money, even if you had to pay more in taxes. It's always better to end up with more money. So you never want to say, oh, well, I'm not going to do that because I don't want to pay 100 grand in taxes. Well, if you have to pay 100 grand in taxes, you're going to have a lot left over. If you do something else so that you don't have 100 grand in taxes, well, then you don't have anything left over. So it's always better to make more money, even if that means you're paying taxes. The other thing is, when you say just wait till you get too old to maintain a house, that's an income problem. That's a wealth problem. If you're too old to maintain your house yourself, you could hire people to maintain your house for you. That's just a money problem. That is not an age problem. That is not a skill problem. That's a money problem. So make more money, save more money, invest more money so that you have more income, so that when you can't maintain your house anymore yourself, when you can't fix the little things that break, you can pay somebody to do it and it's no problem. But if you don't like doing that, again, there's no problem with renting. Just know that over the long term, you end up with less money. That's fine if you prefer that. All right. What site or software are you using, and is it free? I'm assuming that you're talking about the charting software that I always pull up on screen. This is called TradingView. They do have a free version, and I like their free version, but it does pop up. They have like pop-up ads to try and get you to upgrade to the paid version. Like, they're pretty annoying. The pricing is pretty good, if I remember. I mean, I pay for the more expensive one, but TradingView pricing. I think their initial paid plan starts at $12.95 a month. It's billed annually. I'm on, which one am I on? The $60 a month. And it just allows you to do more things. So if you are doing anything where you have like, I don't know, APIs and webhooks and, pulling data into other things, like, it starts to make more sense to upgrade. But if you just want to get rid of the ads, then the $12.95 a month is great. From Mercurial Duck. Sailor, opinion on new strategy and implications for MicroStrategy and Stretch, etc. I think they are in trouble. Not like guaranteed to, that the ship is going to sink, but pretty dang close. I mean, it's just kind of stupid. If Michael Saylor, like last year, raised enough cash where they could have survived, I think, 2 or 3 years and cover all of their dividend and debt payments from that cash pile. If he would have just sat on that cash pile and did nothing, every whale that's trying to shove the price of Bitcoin lower and short Bitcoin into oblivion would have looked at that and said, you know what? We can't hold the price of Bitcoin down long enough and push it low enough in order to force Sailor to be liquidated. It would have ended that. But like a gambling addict, he just said, I'm not going to keep the cash. I'm just going to keep on hitting smashing the buy button. And now he's down to like what, 2 months? It's like it's so close to people being able to get Bitcoin pushed low enough that it can turn Sailor into a forced seller, and Bitcoin will be then much lower, and all those whales will be able to flip their shorts and scoop up Bitcoin at fire sale prices because it doesn't matter how much they're buying, they're just scooping everything up that Michael Saylor is being forced to sell. So huge, I guess you could say, strategy error that he made. In my opinion, it's not a guarantee that it's going to go down. I think if it does, that's a huge buying opportunity for Bitcoin. It will explode after that. Um, because that's the reason why these whales are doing this, so that they can pick it up at a lower price before it goes up. Now, what could stop that from happening? Well, number one, the Clarity Act passing. We already see companies like Charles Schwab are adding Bitcoin trading like just directly into their interface, kind of like Robinhood. I think Fidelity has done this as well. You can go and instead of clicking trade stocks or trade ETFs, you can trade Bitcoin. Um, we see big banks like Chase and Bank of America, they're all hiring crypto people. It's like everybody expects, hey, this is happening. This institutional adoption that everybody expected like 10 years ago is just taking a lot longer. Um, so I think that could bail the whole thing out, and stop him from getting liquidated. But we're not out of the weeds yet. Still a hairy situation here for sure. All right. Blueberry the Goat says only Congress has the power to print money as per the Constitution. That's close, but not exactly accurate. Congress has the power to mint money, or it says to coin money. And that language actually matters because in the Articles of Confederation, basically kind of like the first version of the Constitution, it did not have that language. And during the Revolutionary War, the Continental, their currency, they hyperinflated it to pay for the war, and they went through paper money hyperinflation. So in the drafting of the Constitution, they were intentionally specific and said Congress can't print money. Congress only has the power to coin money. And that's a very important distinction because when you coin money, it's metal. So you're not legally determining the value of it. You're just saying we're stamping out this coin, and it's the value of it is the metal that's in it. Like we can say that a word means a specific weight of gold or silver, but we're not legally declaring what the value is, which is what you do with a fiat currency. And so um, it's Congress does not have the power to print money. That's why they don't. That's why it had to go through a central bank, and that's why basically immediately the power hungry people were like, "Hey, we need to have a central bank like Hamilton." And they tried it 2 or 3 times, and it finally stuck with the Federal Reserve in 1913. So that's why printing money happens at the Federal Reserve, and not Congress. All right. Um, from Nar the X Surfer, what are your thoughts on second citizenships and foreign residencies? Thumbs up, 2 thumbs up, 10 stars, 5 stars, 10 out of 10. I love it. It's a backup plan. Why would you not have a backup plan? Now, the caveat to that is if you have no money, and okay, I shouldn't say no money. If you're not a millionaire, it makes no sense because push comes to shove and you have to escape, you're not going to be leaving that much behind. But once you have a high net worth, suddenly it makes sense to spend a couple $100,000 to get a second citizenship. Suddenly it makes sense to start spending the time traveling to get those permanent residencies in other countries. So that if push comes to shove, you have an escape route already laid for you, that backup plan already in place. It does not make sense to do that work to do that, go through those expenses if you don't already have a high net worth. It's just it's the odds that you need to use something like that are way lower. You're way better off just trying to build wealth first. Um, Now, if you have won the genetic lottery and your parents came from Italy or another country that offers dual citizenship just by descent, and it doesn't cost you that much money, it's like, of course, why would you not do that? Um, Having a backup plan is always a good plan. All right. From Bulligitty. If you had to guess, how do you think the federal government is going to roll over the $8 to $10 trillion in treasuries that are maturing this year? I can tell you without guessing exactly how they are going to roll over $10 trillion worth of short term T bills that are all maturing this year. I'm going to show you right now. Let me pull it up for you. This is a chart of money market funds, total number of dollars in money market funds in the United States. As of right now, there's $8 trillion held in money market funds. Where do you think that $8 trillion is deployed? T bills. Every time a T bill matures, the government borrows a new T bill, and your dollars that are sitting in your brokerage account, your dollars that are sitting in your money market fund, your dollars that are sitting in your savings account, your dollars that are sitting in your checking account, your dollars that are sitting in your 401k, any cash anywhere in the system behind the scenes is in T bills or longer term treasuries. And money market funds are all in T bills. So when that T bill gets paid back, you're not pulling your cash out of the money market fund into physical cash and putting it under your mattress. Those dollars stay in the money market fund, and you're earning your 3%, your 4% in your money market fund. And it just stays in there, which means as that T bill gets paid back, it just gets rolled over into the next T bill. And right now there's $8 trillion in there. So that's how. That's how they're going to roll it over, because all the money that's currently invested in those T bills is just going to be reinvested in the next round of T bills. All right, let's see here. From Me Tenderfoot. Joe, I've listened to you for a few years. Fundamentals, first principles, and consistency are admirable, hard to find. I value your perspective. You've done the work and generous to share. Oh, no question. Well, thank you. Appreciate that. Thanks for the kind words. I keep on doing this because you guys keep on showing up. So thank you for watching. All right. From Ginger 2, thoughts on the leaked OpenAI financials? Haven't looked at them yet, so unfortunately, I don't have any thoughts for you there. Also, do you think Adobe is a buy? I'm not currently long or short Adobe. That one is still still a toss up for me. When you look at the chart, that's not a chart that I don't want to be catching this falling knife. We have this little bear flag here. We broke through. We're currently testing that old support as new resistance. It was support back here as well that we're testing. This is not a confident looking chart. This is not something that I'd be like, oh yeah, I'm comfortable like trying to nail the bottom here. Insiders are not buying. They're going through leadership changes. Not really something that looks like I want to gamble on right now. They're making a ton of money though. So it's like from a value perspective, it's like, man, what's their PE ratio? 12? Like it's crazy. Who would have thought Adobe would have a PE of 12 versus like when you look at like Costco, their PE is 46. But when you have a company like Costco where it's like, okay, no matter what, the people who show up and walk up and down every aisle of Costco every single Saturday or Sunday are going to keep on paying that membership fee, and they're just slowly growing. It's like investors are willing to pay a very high premium for the high confidence that those earnings will continue to just slowly grow. People are valuing Adobe lower because they're saying, we are not confident that the earnings they're making will continue into the future. So I don't know if it's a buy or a short right now, because if I did, I'd have a position, and I don't have a position. It could be a great value buy right now. Could be that the market is completely mispricing it. But I think there's a good reason the market is pricing it so low right now. All right. Robert Toledo says he doesn't have to yield dividends. Read the fine print. He's talking about MicroStrategy. On I think one of the preferreds he does have to continue, but on most of the preferreds he can shut those dividends off. But what do you think will happen if he stops paying dividends on those things? Do you think the price will stay where it's at? Do you think anybody will hold those things? Probably not. And he does have to keep on making the payments on the debt. So again, not guaranteed that that ship is going to crash and burn, but it's not a good situation. All right, let's see here. All right, question from Ginger2. Thoughts on Meta selling compute? Doesn't seem like A, Meta had no plan and again burned hundreds of billions of dollars on another failed experiment, and B, compute bubble will burst. If there was a bubble in compute right now, in other words, like a ton of excess capacity, Amazon wouldn't be able to be raising its prices right now on 6-year-old chips by 20%. Their A100s and H100s, they're raising their prices right now. I think that Meta just looked at the market and saw what SpaceX is doing, and they're like, "Hey, man, we're getting hammered. This is a signal of like the space we're moving into. Like, we're going to plan on trying to get into this." But if they're like, that's the way that markets work, is if there is a bunch of excess supply, then the prices come down to meet demand. That's not what's happening. So it looks to me like just more of a future signal on what Meta is trying to pivot into. It, it just based on the rest of the market, there's no signs of excess compute. Why are you throwing angry faces, people? You're talking to, I don't know if you're talking to me. If my face looks angry, I'm sorry. I always look angry. Maybe I should try and smile more. I'm not angry. I'm mostly like when I record, I have like bright lights, so that like the cameras and everything, like they look okay. If you don't have bright lights on your face while you're recording, then the back looks like super, like way too bright. Just when you have the, what's it called? The exposure high enough to be able to like, it just looks bad. And so, I'm more trying to see because, because of the lights. Someone was mad about your T-bill answer. Oh, okay. All right. So not me. All right. Well, I do look angry most of the time, though. My wife always tells me that, especially in public. I'm always very suspicious of people who try and come up to me and talk to me. And so it doesn't happen that often. Do you have a CFA certificate? No, I do not. I'm not a CFA. For a couple of years when I was a broker, considered trying to go down that route, but the smartest people that I knew, and when I say smart, I mean like book smart, like math wise, like they, run circles around me, like with, mental math and, like, scores on tests and all that kind of stuff. The smartest people that I knew, they were able to pass their 1 and 2 fairly easily, but it took them years of, trying and failing and trying again to get their level 3. And by the time I was like ready to commit to that, I was already mentally checked out. I was like, I'm leaving. I'm going to be starting my own business. So it just never made sense for me to try and commit that that time and energy to that. All right, from Ginger 2. Good point on the prices raised by Amazon, but if something like 80% or more of compute is going to OpenAI and Anthropic, and they're fundamentally unprofitable, it doesn't seem sustainable. Well, it's unsustainable until they can no longer. Um, it's sustainable until the point where they run out of money to spend, and so that's why companies like SpaceX and Anthropic and OpenAI are now trying to go public because um, they've run out of private capital to raise, and also they're slowly moving into the right direction, and so they are no longer as wildly unprofitable as they were like a year ago or 2 years ago. Um, and so just because something is unprofitable now does not mean that they cannot last long enough to eventually become profitable. Also, just because those two companies, let's say, if they're never able to turn profitable, doesn't mean that the rest of the industry won't figure it out and that the demand for the thing that they were buying will not continue. From Mike 5250 question: what do you think of the last few months of the market ripping? Is it too fast and might it pull back soon? I don't think so. I mean, anything is possible, but when you look at the last couple of years, right here in 2018, there was a 20% drawdown. In 2020, there was a 35% drawdown. In 2022, there was a 27% drawdown. In 2023, there was a 10% drawdown. In 2025, there was a 21% drawdown. In 2026, there was a 10% drawdown. And so the idea that the markets have done nothing but go up is just incorrect. In fact, the number of 10% plus drawdowns that we've had in the last 10 years historically is much higher than the norm. And so every one of these is fuel for the next rally. So people forget that a year ago we had a bear market. If it goes down 20%, that's a bear market. That was a year ago. And then this year we had a correction. A 10% is a correction. And so year to date, the market is only up 20%, which I know is like, oh, 20%, that's crazy. The market averages, 11% or whatever. But the market rarely ever hits its average. The market averages 11% or so because some years it's up way more and some years it's up way less or even down. Um, it almost never hits the exact average. So usually you just have way bigger up years or way bigger down years. Um, so no, I don't think this little we're currently up 7% from the high at the beginning of this year. Oh, I'm sorry, that was a year that I was looking at. So if we look year to date, we're only up 9%. So we're up 20% in the last 365 days. But since the beginning of this year, we're only up 9%. So no, I don't think I don't think there's anything about this rally that looks like insane. From Cabragoon Cabulus 4082. Working on my series licensing, testing 6, 63, 65. Do you believe holding an S&P 500 index as a large base is usually good for most people? Yes, although I would say you probably want to split it up a little bit more than that. The S&P 500 is not always the best performing index. In fact, many times it's not. So if you're going to be doing passive index investing, might as well just even do something like VT. Like if you only want one index fund, get an index fund that has all the stocks in it. Why would you limit yourself to just 500 of them? Um, If you are okay with holding a couple of index funds and you don't care about owning just one, then you can do SPY and QQQ and IWM and a couple others. That way you can do a little bit of rebalancing between them when one outperforms another. So, um, so yeah, for the thing is like there's levels to this, right? So, like when you look at like the Dave Ramsey advice of get out of debt, make a budget, put money in index funds, and that's it. It's like if 95% of people just did that, they would escape poverty and be able to take care of themselves for their entire life and eventually be able to retire. Like that's a huge step up from where most people live. So, great advice. But that doesn't mean that that's the best thing possible. You can do better than that. It just means that there's different levels. So it depends on the personal situation that you're in. From unknown YTX, I bought calls on Amazon. I feel like they're going to crush 730 earnings. They may not crush 730 earnings, but that being said, I am extremely bullish on Amazon. It is one of my largest positions. Just for full disclosure, just so you know, like I've said this before, if I was forced to only have one position, it'd probably be Amazon. Um, I am more bullish and more confident in that position than basically like anything else that you can find in the market. It's not a recommendation. Not saying that you should do that. I'm not saying that I'm doing that because I'm not. But just so you know, like the bias or the conflict of interest in my opinions on Amazon are, I've got my money in it. So I'll put, there's skin in the game there with that opinion. All right. I want to be a cowboy. Where can I go to learn how to do options? I only buy in 100 lumps, so I thought I might be able to make some extra money on them. Do you have a course? I do. Starting on Monday, um, I'm going to be releasing all of my educational courses for free. You'll in my videos starting on Monday, you'll be able to see the instructions on how to get access to that, and I have an options course in there. So if you don't want to wait till Monday, just go on YouTube. And if you watch 10 hours of videos on YouTube about basic option strategies, you'll probably be set. It's not super complicated. You just have to spend enough time um, getting into the terminology and understanding the mechanics of what the option contracts represent and what they're doing. And then I would say next step after you've spent, let's say 10 hours watching videos about it, use a paper trading account. You can do this pretty much at any online brokerage. You can use a paper trading feature. But I would say do a paper trading first. That way, like you can test out whether you actually understand what's going on or not. And you might see like, oh, like I that I was supposed to buy this call option when I really meant I was supposed to sell it to open for a covered call or whatever. So you want to get your feet wet without your money on the line, and then from there, then you start off with a very small amount of money. The only downside to paper trading, rather than using your real money, the downside is there's no stakes, and so you are less likely to be very, very careful and like pay attention. And then so they'll like when you just start watching videos on something, you're learning, like your level of expertise in something goes from zero to like decent enough to explain it to somebody. Then when you start paper trading it, it's like, oh, next level up. Not only can I explain it to somebody, but if somebody was trading this, I'd be able to like talk to them about it. And then from there, when you put your own money on the line, it's like that risk and that skin in the game is just like probably the biggest unlock in understanding about what's going on, because I don't know what it does to your brain, but once you have your real money on the line, you are just paying so much more attention and focusing on it more. And then when you do make a mistake, it's like you never make that mistake again. You're like so focused on it that because it costs you actual money, like you lose money on it. So that's why you want to start using real money at some point. But all right, Atlas 4225, stock picks, ECM, and NVO. Not looking good. ACM is, what do they do? Industrial services, engineering, and construction. Sometimes what I like to do is I like to pull up the ETFs that own. Okay, these are just index ETFs. So, all right, so we've got this one. This is going to be kind of geared towards the same industry. We've got PAVE. So this is an ETF that invests in infrastructure development. This is a stock that is in that industry, so it's included in that ETF. So my question would be, why is this company so underperforming its peers? Like its peers are all doing great. It is not. So that's a red flag. The chart is a red flag. This big huge drop off, playing with support, but not showing any real good level of it's not bouncing at all. It's just lower lows and lower highs. So technically speaking, this looks fairly bearish. Has definitely not shown any sign yet of putting in a bottom. NVO, this has shown a sign of putting in a bottom. So you've gotten these big gap downs, but now you have this rounded bottom, and you put in you have this rally here, and then it falls again and puts in a higher low, and now we're back above the 200-day moving average. So if you were looking to go long Novo Nordisk, this is actually a fairly good sign. Now you want to be careful with your stops. There's some good support that it's above now at like this 48-ish level, 47-ish level, right at like the 200-day. And so you'd want to be very careful to get out if this ends up being a false rally, because it's had some big rallies on the way down. But this recent low looks different than the last couple of lows. The last couple of lows looked like overreactions that get bought back up with some profit taking from the shorts. This looks a little bit differently in shape and structure. So Novo Nordisk may have actually put a bottom in. Also fundamentally, I think they're pretty good. Their PE ratio is at 11. They own Ozempic. I think it's Ozempic. They're not tirzepatide, right? I think they're semaglutide. And so yeah, this might be a good time to enter Novo Nordisk. The approval of Wegovy is that's the pill version of it, and a lot of other companies are going to be trying to sell the heck out of that because people want to take a pill a lot more than they want to pin themselves. From Nar the X Surfer, how do you think agentic trading will influence markets and trading? I think probably it will have about as much of an effect as like high frequency trading had on markets. So there's two ways that this could go. One is that basically all these bots that are doing the trading execute virtually the exact same strategies, and then therefore that contributes to just more volatility in the market because you have more money that is doing the same things, buying it up and then selling it down. The other option is that you have all of these bots using different strategies, and then therefore that just contributes to more natural price discovery, less volatility. You get those dips that get bought up quicker and more easily, the spikes that get sold off quicker and more easily. So you have less volatility, more active price discovery. I think it's probably the latter, just because at the end of the day, each one of these strategies is still at least somewhat being influenced by the people who are deploying them. And so that is the limit. And so with this being available to becoming more and more available to the average person, like I know a lot of people who have very little experience with investing and trading, like very little, who are trying to deploy their trading bots right now. It's a very common thing right now. Robinhood is rolling it out. Um, and so I think this will just be very similar to like what high frequency trading did to the market, which is long term, basically nothing. Short term, maybe changes the day trading dynamics a little bit. All right, question from Iced Croissant. Hey, I don't know if you already explained this, but was there ever an update on what the national grid has been doing? Solar energy use percentage peaked recently, and I'm curious for non-oil energy going liquid natural gas. Part of the reason why solar energy took off so much is because of two things, both in China. One, solar production was heavily subsidized by the Chinese government. And so they're basically, the rest of the world was benefiting from their monetary manipulation, their subsidies, um, and it was making it artificially cheaper for everybody else. And so they were, they were they were they were taking the long-term hit on that, and everybody else was benefiting. The second thing is most of the labor was basically like slave labor, and so just the labor costs alone for production were way cheaper than they should have been. Um, I think a lot of that has bled off recently, which is one of the reasons why costs have gone up, which is one of the reasons why uh, use usage increase has slowed down or maybe even peaked. Um, Another part of it is just the long-term data has become more and more evident for like the life cycle of solar panels. And so you get um, the overall cost is just in the short term, it is not as good as as options like natural gas. And over the long term, it's nowhere near something like nuclear. In terms of energy density, environmental greenness and cleanness and safety and long-term cost of electricity production, nothing comes close to nuclear. And so that's why everybody around the world is pivoting to try and go all in on nuclear. It's like, let's use fossil fuels to bridge the gap right now, and then make nuclear the big thing long term. And we'll probably still have to use like natural gas to just bridge the gap for the energy production you can turn on and shut off. So I don't know if that was an answer to your question, but that's what it looks like. Things are headed towards long term. All right, from Chris, or no, Chili Will. I got this idea from one of your videos. If the US is trying to reshore supply chains and protect the Western Hemisphere, what sectors or assets benefit first and what benefits long term? Well, overall, the US markets benefit long term. I don't know if you guys saw this chart. Let me see if I can find it. Hmm, Here it is. US net capital inflows. This is foreign money coming into the United States. Never before has it been anywhere near, like, we've never seen anything close to what is happening right now. This is a direct result of all of the imperial, the global imperial actions that the United States government has been doing recently. We've just never seen anything like this before. And I think this will continue for the foreseeable future. Short term, probably leaders. We got tech, probably military. Um, A little bit longer term, you got things like energy. I don't know. We'll see. What other questions do you guys have for me? All right, from Robert. Workforce participation is at a 50-year low. Why and how to fix it? One reason is because of the aging boomer population. They're just deciding either being forced out. A lot of the layoffs that have happened over the last couple of years, I think they're blaming AI, and it's being used as a cover to get rid of people who they've been wanting to get rid of for a long time because they're just not productive in a world of technology. When you like, this is like anecdotal. I don't have any data to support this, but if you ask any younger millennial or older Gen Z in a corporate job, 11 out of 10 of them will tell you that they are more productive than 5 to 10 boomers that they work with who are getting paid more than them. And like, it's not just it's not an arrogance thing or a pride thing. It's, hey, these people are printing spreadsheets out and doing calculations by hand, and they don't know how to do a function on Excel that will take 10 seconds, and they're doing 4 hours of work that I can do in 10 seconds. It's like, it's unbelievable how common that is in large corporations. You've got massive percentages of of employee workforces that that cannot operate efficiently in a technology age. If they don't know how to use Excel, like they print off emails to read them. Now I know this sounds like super ageist, and actually it's really funny. Like, if people who are like 70 plus are way better at technology than like the 50 to 70 range. I don't know what it is. Like, um, this is, again, it's anecdotal, but when I worked in customer service, we knew, like, we'd see the profile pop up when somebody would call in. If they were in between the ages of like I said, like, I don't know, probably like 45 to 65, 9 times out of 10, they were calling in because they needed help resetting their password. And so we'd be like, "Hey, click here on the website. Click here on the website." They'd be like, "I don't see that." Like, "What do you mean click? Like, what is" like, it was just like, it was like like, we knew when the profile popped up whether or not the person would be able to operate a computer or not. And if they were over the age of 70, 9 times out of 10, they'd be like, "No problem. They could use a computer like nobody's business." Um, so I know that sounds ageist. It's really like a gap. It's not even like the older people are the worst. It's like there's like a group of, and I don't know why. Maybe it was just because the time period of their lives when computers became a thing. But anyway, all that being said, I think a lot of layoffs that have happened are just covered to get rid of people who just were never productive in the first place. Um, and then a lot of those people are like, "Hey, well, I'm just going to retire because I've got enough saved up, so I'm not going to try and get another job paying way less than I was making before." So I think that's a big part of it. Another part of it, I think, is the way that data is collected. Um, the way that data is collected, I think, doesn't account for a lot of people who work in a way and produce money that it just doesn't show up in the statistics, especially younger people. Um, and I know they try and collect the data on people who are like, self-employed, like gig workers, whatever. But like, if you're a streamer, a video game streamer, and you make 50 or 100 grand from streaming video games. I mean, that's fairly common today. Um, I don't know how many of those people show up in the workforce participation um, stats. So I think there's a couple of things happening there. Um, the other thing is, like, technically, if you have a very, very, very wealthy and productive economy, you don't really need a huge labor force. Um, this is a little bit skewed because we're talking about children here, but just like for an example purpose, like just think about it this way. My family needs one income to be able to support 4, 5, 6 people. Um, and so the wealthier an economy, like if you have a dirt poor society that is like subsistence level, like all the children and everybody works nonstop from wake up to go to bed. You're working just to survive. The labor force participation rate is 100% in the places that have the most poverty because it has to be. You don't work, you die. Um, and so the wealthier a place is, really the fewer the smaller percentage of an economy needs to work. Now, it doesn't mean that that necessarily will happen because you can just have people who choose to work even though they might not need to. Um, but it's not inherently a bad sign if that labor force participation drops. Um, let's see here. What do you think about NASDAQ working towards 24/5 trading? I think eventually every single asset will trade 24/7. It's a technological problem. It's not like, or it's actually the technology is there. It's really a legal problem. There's so much bureaucracy in the way that these, like, even from the standpoint of like, what is the difference between a publicly traded company and a privately held company? It's legal definitions and it's legal regulations on who can invest in what and what kind of reporting has to happen and what kind of paperwork has to be filed and what kind of fees have to be paid. Um, and so it's just legal frameworks that prevent 24/7 trading. It's not even a technology thing. So it'll be slow, but I think eventually within the next couple of years, everything will trade kind of like Bitcoin does, just 24/7. Like there's no inherent reason why it can't, and that's what people want, and that's what will happen. Um, it will also prevent some volatility because as news comes out, markets can respond immediately. You won't have like big gap ups and gap downs from, news that happens when things can't trade. From Cabergoon Cabulus, do you like a separate portfolio with just REITs for dividend income? I don't like REITs. For my real estate portion of my portfolio, I like physical real estate. You get the tax benefits, you get the leverage benefits with the mortgage, you get like there's that you don't get any of that with REITs. I don't like REITs. Um, Now I do think having a separate portfolio for income is a good idea, and as you get older, you should probably move more from growth into income. Um, but some of the best, some I don't, that doesn't necessarily mean REITs. Some of the best dividend payers are not REITs. All right, from Joey R 2720, you should debate Peter Schiff. I really like Peter Schiff. He's one of the people that very early on when I was a stockbroker got me interested in learning about economics and started exposing some of the some of the things that the mainstream gets wrong and started me down the rabbit hole of learning, and eventually is one of the reasons why I quit my job because I was like, I don't really believe in what I'm selling anymore. Um, so I love Peter Schiff. Huge respect for him. I had him on my podcast. I don't remember if I posted it as a YouTube video years ago. Um, he's not like the he's not like the most fun guy. um, he's very, very brash and like aggressive, like to the point where Robert Kiyosaki one time had him on his podcast, and Robert was like glazing him up for the beginning of the interview, just like, talking. He's like, "Hey, I love your stuff. You're so smart. You're so good. Like, I invest in your mutual funds and blah blah blah." He's like, "You're the greatest." And also, I do own some Bitcoin. And Peter Schiff just says, "Well, nobody can be perfect." And like no smile or anything. It was just like, he's very, and it might just be a really dry sense of humor, but from the people that I know that have spent any significant time with him, he's just kind of rude like that. And he was kinda like that in the interview with me as well, when I had him on when I interviewed him. But again, not like, I don't think that's necessarily a bad thing or holding it against him. He also just doesn't, I've noticed this from extreme gold bugs and extreme Bitcoiners on both sides. They're actually really not, open to they're dogmatically committed to their positions, and so when you present them with logical arguments that show that their position is fundamentally flawed, they just run around in circles. For example, like Peter Schiff all the time says there's there's no intrinsic value in Bitcoin, therefore it's worthless. Well, he's an Austrian economist, so he should know there's no intrinsic value in anything. All value is subjective. The reason people buy something is because they value that thing more than what they have to give up to get it, regardless of whether it's gold or anything. Nothing has intrinsic value. It's all subjective based off of the marginal utility to the person who's buying it. That's why gold on a desert island would be worthless. You'd want a bottle of water more than any amount of gold if you were stranded on an island. And so then they retreat to, well, gold can actually be used for things because it's a physical object. It's like, okay, well, PayPal is not a physical object, but PayPal has value. People buy PayPal because it is a technology that allows them to transfer payments. That is valued by the market. Bitcoin is a technology that allows people to transfer payments. It's just that you transfer payments of a different currency. Instead of transferring dollars, you're transferring Bitcoin. And so um, I actually said that to Peter, and I don't his response was something like, "Yeah, well, PayPal has value because it's shares and you can transfer dollars because dollars are legally money, but Bitcoin doesn't have any of that." It's like, "Well, just it does. I just showed you how it does." So they don't have the ability to address the holes in their argument because they're dogmatically committed to their positions. Bitcoiners are the exact same way, like maxi Bitcoiners. Um, so anyway, I like Peter Schiff. I don't think it would be fruitful to debate him because he's debated a lot of people who are better debaters than me, and it's not really that enjoyable to watch. It's more enjoyable to watch people debate who disagree about things, who are able to actually um, look at the logic of arguments and address the actual arguments rather than run away and run circles around them. All right. From James Greenwell, long-term Tesla investor, and I've done well. Now a quarter of my portfolio. Should I stay or should I go? Bonus if you can name the band. I can't. I don't. I'm really bad with band names. I know the song you're talking about. Should I stay or should I go? I don't know the band name. Tesla, quarter of your portfolio. This isn't advice. You can do whatever you want. The more concentrated you are in a position, the more risk you have because you have to be right. For example, let's say you have 100% of your portfolio in something. Well, if that goes to zero, you lose everything. That is something that you will probably never be able to come back from unless you are just starting off in your career and you have really nothing. But the later you are in your investing career and the more you have built up, the more necessary it is to make sure that you're not taking on risks that could ruin you. Um, if that position declines by 50%, which Tesla can do, it does that all the time, it has 50% drawdowns, and you have 100% of your portfolio in it, you lose 50%. If you lose 50%, you need a 100% gain just to get back up to break even. 100% gains are hard to get. So now you say, okay, well, if I only have 50% of my portfolio in something and it has a 50% drawdown, I only lose 25%. Now you only need a 33%, I think it's like 33% increase in order to get back up to break even. That's a lot easier to do than a 100% increase. Now, let's say you only have 10% of your portfolio in something and it has a 50% drawdown. You only lost 5% of your portfolio. Now you only need a 6% gain to just get back up to break even. Very easy to do. And so risk management, no matter how you do it, is key, whether you want to do that through position sizing, whether you want to do that through stops, whether you want to do that through hedging with options. There's a million and one ways to manage your risk, but it's important that you manage your risk. That's why the best investors and traders throughout history always say never lose money. The number one most important rule is cut your losses, never lose money, manage your risk. Um, and so if you do have a quarter of your portfolio in something, the chance that you lose a quarter of your portfolio is fairly high. And so you want to make sure that you're doing something to mitigate that risk because it's hard to come back from that. All right, let's see. From Toxic Boyfriend. Kevin Warsh has repeatedly said that he's focused on the number to the left side of the decimal in regards to inflation. Couldn't that be interpreted as 2.9% within the 2% goal? Yeah, definitely. But I mean, it's important because he's saying, hey, look, we're looking for big moves. We're not looking to dial things in very, very specifically. So he's like, I'm not really concerned if inflation goes from 4.2 to 4.1. He's like, I don't really care if it goes from 3.9 to 3.8. We need to get from 4 to 3 to 2. Like those are the big numbers that matter. Um, that means there's big moves that are gonna be needed for that. But 2.9% is a heck of a lot better than 4.9%. And so right now, I think that's a good position for the Federal Reserve to take. Otherwise, you get the recent tradition of, hey, it moved from 3.9% to 3.8%. We're making good progress. And he's like, no, that's not progress. That's the same. We're we're focusing on the bigger number here. All right, from Iced Croissant. Just to clarify, if nuclear is most worth it in the long term, is solar not worth investing long term at all, or just by comparison to nuclear standards? Well, if you take a look at the real cost of solar, like not the subsidized with money printing and slave labor costs coming out of China, you look at the real cost of solar, it's a lot higher than, and it's been moving higher because of that has been going away. And so um, that decreases its value over the long term. When you look at the life cycle of it as well, when you look at the lack of ability to recycle a lot of the stuff in solar panels, the environmental impact that that has, the amount of land necessary for that, and the places where you have to deploy those many square miles that destroy the land underneath them from the installation and the lack of sun now hitting that. How large deployments can actually change the local weather from the heat. Um, and then the lack of or the power loss from transmitting that power over such a long distance to be able to deploy those in areas where you can. It just doesn't really make much sense for large scale, like base load energy production. There are smaller cases where it makes a lot more sense. Like for a lot of people in many areas, it totally makes sense to get solar panels on your own roof because it's like, okay, if you've got a 20-year payback period or something like that, and it's like that can definitely make a lot of sense. Um, but not when it's subsidized from like government like tax credits or anything like that, because then again, you're just changing who's paying the cost. You're not changing the actual overall cost. Um, so I think it's a lot more situation dependent, but it's pretty clear it's not really a good solution for like baseload power for the long term. From Agam KK, thoughts on stocks heading into July and August with the SPR at lows? I'm pretty bullish. I think I've been pretty clear about that for a while. I think people used to call me a perma bear. Now I think people probably put me in the perma bull camp. I'm just watching the money flows. Um, I think that there's a good chance that the markets that we may be about to see like a rip your face off rally. All right, from Bitcoin Hopper, Joe, why do you think ASPI is not doing very well still? I have held a modest position, even since after resource breakout alert close, seems to be a stinker. ASPI, pulled up. Well, it's possible that we're starting to see an upside down head and shoulders form here. We are below the 200 days, so that's not great, but we do have a little bit of a shoulder here, head here, and then maybe a shoulder could be forming here. We need to see we need to see it move up from here to confirm that formation. And then we'd also need to see a breakout above that resistance as new support for that really to be confirmed. But it's possible we see that here. Um, so that could be a good sign. Nuclear over, well, this is not necessarily specifically nuclear because they do other stuff as well for, let's see, medical as well, right? Let's see. Yeah, nuclear medicine, next generation semiconductors, and nuclear energy. So I, from what I can tell, solid for the long term. We've got a nice bounce off of this long term support right here, but we do have this short term bearish momentum. So definitely not out of the weeds yet. But if it does hold, then this could be a good move up in the longer term. We'll see though. Do you, from DSB 117, do you believe or do you think gold has found a medium term bottom for a swing trade long? I think there's a very good chance of that. If you look at gold right now, I've said for a while, I mean, I didn't just draw these lines right now. I drew these lines a while ago. Um, I think there's a good chance gold stays between 4 and 5,000 ish, maybe 5,500, but 4 to 5,000 ish for a while, similar to how it was in this trading range from 2013 through 2019. Then it finally broke out, made a big rally. And then it was in this trading range from 2020 through 2024, bounced around in there for a while before it finally broke out and headed much higher. So I think there's a good chance that we see another pattern like that. Let me see if I can drop a little rectangle here. I don't know how long, but I would not be surprised at all to see this. Also, we did just get a nice little bounce here. It tested that support quite a few times and has bounced off. Gold has been fairly oversold. Sentiment is on, short-term sentiment on gold trading right now is super, super low. So I think that there's a good chance we're in for a little bounce in gold for the short term. All right, question from Frickdom. What are your thoughts on physical assets outside precious metals and the like? Meaning, if you invested 5% or similar percentage towards your hobby, like comics, retro games, etc. I'm not a fan of that unless you are a top expert in that space. If it's just a hobby, there is a very high likelihood that you don't understand how to value that asset because they're basically collectibles that have very illiquid markets that are extremely cyclical. And sometimes those cycles just end because they're based on nostalgia, and nostalgia doesn't last forever. It's like right now, Pokemon cards are very valuable because a lot of the people that are buying and selling them traded them as kids. Um, and so you might say, okay, well, kids today are doing that same thing. So it's got, at least, a couple of decades of runway in front of it. And that's possible. But nostalgia itself um, I mean, like, look at like Beanie Babies. Like that was something that a lot of people thought was, a good investment for, a hobby collection type of thing. It just wasn't. Um, and so, like me personally, for the most part, investing means I'm buying something that produces income, or at least will produce income in the future. Like when you invest in stocks, that's a business. It's a company that makes real things and sells them at a profit, or at least tries to, or at least in the future that's the goal. And so when you invest or buy something that inherently cannot produce income, it's not really an asset. It's like it is more of a gamble. And so you can be an expert in a space. You can be an expert in watches. You can be an expert in Pokemon cards. You can be an expert in, in old collectible cars. You can be an expert in these little areas of collectibles, and then you will know, hey, I'm buying these things. I know that this thing is actually worth this much because I know I could go sell it for this much, and I was able to find a deal and find a discount. And so you have to be able to know for certain what it is that you're buying and what the true value of it is. And if it's just a hobby of yours, it's pretty unlikely that you are that much of an expert in that thing. And so, but if you are, and you really know the space really well, then there's no problem with dabbling in it to test your test your skills. 5% seems like a lot before you before you really know it. But at that point, then it almost becomes like a business. You are you have to be able to treat it as if it's like a business. All right, from James Greenwell. New to option trading, I have a call that is in the money expiring July 7th. Should I continue to lower my ask price on Monday until it trades? Um, if it's in the money, you should be able to sell it for at least its intrinsic value. If it expires July 7th, there's probably very little time value on it left. So you're probably asking way more than the intrinsic value if it's not selling. If you're asking for the intrinsic value and it's not selling, it's just because it's extremely illiquid, then exercise it. You can wait until expiration if you want, but if you exercise it, then you immediately buy the shares, and then you have to get your broker on the phone to do this a lot of times, but you would want to sell the shares first because your exercise price is locked in. So if they allow you to sell the shares first before you actually have them, they'll do that because you have the option that allows you to buy them for the delivery of the sale. Um, and so if you are not able to sell your option at intrinsic value, then that's how you do it. You call your broker and you say, hey, this thing is not trading for its intrinsic value. I need to sell the shares first, and then after we sell them, then I'm going to exercise to deliver the shares for the sale. Um, but if you're not at intrinsic value yet, then should need to look at the bid and the ask and see what the bid and the ask is, and you'll probably get filled at the midpoint. From Taxman Hog, no alert for this live event. Well, it's not really a live event, just a live stream. So when I do live streams on YouTube, I just go live. I don't send out emails or anything. So if that's what you were looking for, that's why it didn't come out. On YouTube, you can turn on notifications for things like you go to my page, there's like a bell, like a notification thing you can turn on so that the YouTube app will notify you when creators you want to see go live. Um, if you are already enrolled in that and it didn't do that for you, that's a YouTube thing. I don't know. I don't know why it wouldn't have done that for you. Um, from Agam KK, thanks for your input. I just went into Keg and Qubit, bullish on nuclear and quantum, or do you think money will rotate elsewhere? I am not bullish on quantum personally. Um, I think it's very likely something that just completely fizzles out into obscurity. And just keep in mind, I know that I'm not an expert in this area. From the limited research that I've been able to do, it seems like quantum computing, the way that it works, it is the use case for it is extreme. Like even if and once it works, which we're a long way off from, um, the the use case for it is extremely limited. Um, and most of the companies that are quantum computing companies, when you look at their history, it's like there's a very high likelihood that this is just a scam. Like one of the largest quantum computing companies, I think it might be Qubit, QUBT. Um, Let me see here. Yeah. QUBT used to be an energy drink company. Um, and then when you look at their stock price, I mean, this is not the chart of a company that it's like, "Oh, this is a really solid company that is running a real business and improving their company over the long term." This is the stock chart of a company that has moved from, like, one scammy bubble to the next and just issued shares to try and keep on going every time there's a little bit of a pump and dump. This is not something that looks like remotely like legit to me. I could be wrong about that, but it just screams red flags from every angle you look at it. And unfortunately, it seems like a lot of quantum computing companies are similar to that. Unknown YTX. I think Bitcoin is in a similar boat to Pokemon cards. It has some value, but nowhere near what it's at now. What is the value of a payment network that is pseudonymous and permissionless? I would imagine that it's not even in the same universe as little paper squares with monsters drawn on them. The use value of Bitcoin is that it allows anybody anywhere to transfer payments to anybody anywhere without censorship, without permission, without blockages, without governments interfering. That's a fairly valuable thing over the long term. In fact, payment networks are literally what makes the world go round. The ability to transfer value from one person to another. Um, I think the idea that it is just a collectible or like NFTs or something that's like a bubble that's just going to go to zero is just misunderstanding or just no understanding of what it actually is. That's literally like the same thing as saying Visa or MasterCard or PayPal are like Pokemon cards. It's like they're payment networks. Those are some of the most valuable things in the global economy. Now the question is, will people choose to keep on using it because it's not transferring dollars, it's transferring Bitcoin, and do people want to receive Bitcoin for payments? And if the answer to that is no, then yeah, it goes to zero. But if the answer to that is ever yes, then it doesn't belong in the same universe of thought as trading cards. All right, from Ice Croissant. Do you think FLNC will ever peak above 45? Do energy storage companies hold more value than pure production when it comes to diversifying, or is the relationship just symbiotic and I'm overthinking it? Probably overthinking it. If you're asking the question whether you're overthinking it, you probably are. Um, producer, manufacturing, electrical products, Fluence Energy, $3 billion market cap, no earnings, energy storage products and services, and artificial intelligence enabled digital applications for renewables and storage. From what, maybe I'm wrong about this, but it looks like it's not actually making and selling anything yet. I mean, I don't know. What is their revenue? Do they have revenue? Okay, yeah, they do make some revenue. So they must be. I would imagine this company is probably having to issue shares. They're probably having to sell shares in order to continue to raise money to continue to try and build out. The I don't know. My question would be like, what are its main competitors, and does the performance look like similar at all? Um, because it's not just the product that matters; it's the ability to deliver on it. Like it's never the idea; it's always execution. Like you can have the best idea and the best product ever, but if you can't actually deliver on it, it doesn't matter. So I'd imagine that they're probably having those kind of issues just based on the what the chart looks like and what their earnings and revenue looks like. So I don't know. That's more of a fundamental. You got to look at their competitors, look at what they're delivering, the quality of their product, what they're doing with the money that they're raising. All right, Bitcoin weekly bullish divergence whale accumulation spike. High number of tokens in loss. I don't see Bitcoin lower than 54. I think bull done soon. Gonna rip faces. Yeah, the bottom might be in, especially with the Clarity Act coming up. Um, this whole dump and push lower is very possible that it was just a big. Sorry, I see these little threads sticking out of my shirt on the screen. It's possible that it's been just a big push in order to scare the market, get a bunch of people to sell so that whales can scoop it back up at lower prices before all the regulations change and it rips higher. That's definitely possible. Unknown YTX, but what stores do you buy from that except Bitcoin? Its only use case is money laundering, crime, or tax fraud. Man, okay, so just because you said this, and I know you're not saying it to be a troll, it it sounds like you actually think this. I promise you, you really don't understand Bitcoin. That is like demonstrably and empirically false, and it indicates that you've spent about 1 hour studying Bitcoin, and you've only learned about it from people that absolutely hate Bitcoin. Which means that without knowing it, you may be dogmatically committed to a position on Bitcoin, because so far you've been unwilling to hear the actual arguments for it. So if you are willing to accept the idea that maybe there are things about it that you haven't learned about yet and that you may be wrong about, I would recommend reading The Bitcoin Standard by Saifedean Ammous. Obviously, he's a Bitcoiner, but from most of the people out there talking about it, that book does the best job at explaining how it actually works and what it actually is. The line that Bitcoin's only use case is for money laundering, crime, and tax fraud is like, it is the poster child line that that government fiat propagandists and gold bugs use in order to dissuade people from buying it because they are just religiously opposed to Bitcoin. And it indicates that you just haven't done any research into it at all. It is demonstrably false. In fact, it is pseudonymous. It is not anonymous, which means if you use Bitcoin for any crime, they are able to track you and find out, which means it's not used for crime. It's not used for tax fraud because you get found out. There is a permanent blockchain that records every transaction that has ever happened with Bitcoin. It's not used for fraud. It's not used for crime. It's not used for tax avoidance or whatever. In fact, 99% of all those things, they use the dollar. It is way easier to use the dollar for crime, way easier to use the dollar for money laundering, way easier to use the dollar for tax fraud and all sorts of other illicit purposes. Nobody uses Bitcoin for that anymore because it's pseudonymous. It's not anonymous. Guess what is anonymous though? Physical cash transactions. And so it just, I know you're not saying that to be a troll. It is true though that it indicates that you don't know what you're talking about at all. The use case is permissionless payments, which means all around the world, anybody who ever needs to buy something where they don't want to have to explain to a bank what the payment is for and have the bank just say, we don't want to let you do that payment. I could just send that payment. Yeah, it's definitely not used for crime, money laundering, tax fraud. All right. From James Green, new to your asymmetric trading, loving it. I typically don't leave much of my investment in cash, but rethinking that to have cash on hand when a new trade is suggested to move fast. Thoughts? Yes, I like about 5% in cash. The reason why I like that is because it gives you dry powder. So that push comes to shove, you don't have to be a forced seller. It also means that when deals come up, you can act on them and you don't have to sell something else in order to do that. The other use case of Bitcoin is a use case of gold, by the way, that you can store the value of your labor or your sales in something that cannot be inflated away. Nobody can just, by declaration, choose to create more of the supply of something like Bitcoin or gold. In order to make more gold, you have to dig it out of the ground. The only way you're going to do that is if you can dig it out of the ground for a lower cost than getting it from somebody else. So if it costs me, let's say $5,000 to dig gold out of the ground because of the equipment and the labor and everything, and then refine it and then sell it, I can only sell it for $4,000. I'm not going to do that. So the supply can't go up. But if I can get it out of the ground for $2,000 from the labor and everything, then I am going to do that because it's cheaper to get gold that way than it is to buy it from somebody on the open market. There's a profit there. And so the supply of gold increases along with the demand for more gold relative to all other goods and services. And the supply will stop growing once that reaches equilibrium again. Bitcoin is the same way. It's done through like the software is programmed in a way that causes the supply to increase with the difficulty adjustments on the mining. But the rate at which the Bitcoin supply increases is programmed in. And so nobody can just choose, hey, I'm going to create more Bitcoin here, which means the value of the labor that you store in there is just directly tied to the value of that Bitcoin itself. And nobody can just siphon it away like they can with the dollar. You hold on to dollars, your purchasing power is just siphoned away whenever the government chooses to siphon it away from you. What places accept Bitcoin as payment that you shop at? That's kind of irrelevant because when a money is becoming money, this is Gresham's law. Bad money drives out good money. So when Rome would say, "Hey, all those coins that are in circulation, they're being counterfeited. So you have to turn in your old coins. We're going to melt them down, mint new coins, and then give you back the same number of coins that you turned in." And then when they do that, they've been diluted. And so everybody's like, "Oh, I'm going to stop turning in the old coins because if I turn in the old coins, I'm turning in an ounce of gold and I'm getting back a half an ounce of gold." And so they hoard the real gold, and they spend the new less valuable gold. And so as an old form of money is being devalued, its transaction volume accelerates. People want to only use the bad money for payments, and they want to hoard and hold on to the good money because it preserves the value better. And so when you have a new form, a new competition, new competitor for money coming in, you would never expect it to be used for payments because everybody wants to hoard it. Everybody wants to accumulate it. For payments, I'm going to spend dollars as much as I can. The only time you would ever use Bitcoin or the new form of money for payments is when the seller will not accept anything but that for payment. And there are certainly merchants today who only accept Bitcoin. A lot of them are online. It's a digital money. That makes sense. But it just there's no world in which you would expect, oh, I went to McDonald's or the grocery store. Even if they did accept Bitcoin, why would you spend your Bitcoin? People want to accumulate it right now for the chance that it becomes money in the future. So you would never expect, if a new form of money is starting to evolve into taking the place of the old form of money, you would never expect transaction volume to take off first. You'd expect accumulation to happen first, and transactions, payments in that would only happen at the end of that cycle of displacement, not at the beginning. All right. From Agam KK, thoughts on memory cycle with Apple and other companies raising prices to accommodate, and when do you think the cycle ends? I think it'll probably go on for a little bit longer. But you can bet Apple and other companies are out for blood. They're not going to let this continue. Number one, that profit margin now, this is the beauty of free markets. It massively incentivizes everybody else to come in and try and compete there in that space because there's so much profit there. Everybody wants to take advantage of that. So this is one of those things in free markets. High prices are the cure for high prices because those high prices, big profit margins attract competition. And you can bet Apple is not happy. They've never had to raise prices like this before, ever. And they're not just going to take this sitting down. They have put people or companies into the ground for much less, and you can bet they're going to be they're right now their biggest problem and biggest focus is fixing this memory thing. So that comes from new competition, new companies making their own memory, whatever. It also comes from figuring out new ways to make memory more efficient so that you don't need as much. And all of that will eventually solve this problem. It's a question of how long it'll take. Probably not more than a couple of years, but probably more than a couple of months. Is investing in dystopian tech the next wave? After the SpaceX IPO, I've been following RDW and PL, and I'm very intrigued. I don't know what you mean by dystopian, but let's take a look. RDW. All right, interesting. So this is a stock that maybe you or somebody else has brought up multiple times on the YouTube live streams. Right when it broke out here, that's where I drew those lines for. And I initially said that one, like, that would be a hard level to get above. Like, that would be the exit target. Um, and it's fallen all the way back down to the 200-day, back to where it was before. Um, Aerospace and defense. Space and defense technologies, mission critical solutions for government, commercial, and civil customers. It includes spacecraft platforms, space infrastructure, avionics, sensors, payloads, power generation. Hmm. Yeah, I don't know. Um, so I assume by dystopian tech you mean like companies that are enabling the government to have more dystopian tyrannical control over its citizens, um, and that certainly could be a play. You know, Palantir did really well. OpenAI is looking at giving the government a stake in order to solve political problems. Um, so yeah, could be a play. All right, from Guppy Gaming. Hey, love your videos. Any thoughts on being long on broad-based American index funds nowadays? Has the basic hypothesis of indexing changed at all? Um, no, I think that's a great move. A lot of money is flowing into the United States from everywhere else around the world. The last year and a half has basically destroyed the economies of a lot of competition around the world. A lot of wealth is, as a result, flowing into America. Um, I think the overall American economy is from a money printing standpoint, an international money flow standpoint, um, economic productivity standpoint. I think there's a couple stars that are aligning right now that it's very bullish, bullish time, even if it is a at least partially a boom fueled by credit expansion. Um, and it's a stock picker's game right now, but that means that there's some stocks that have been, you know, crushed recently, and there's some stocks that are, you know, doing great recently. But when you look at like, you know, the S&P 500, um, some of the companies, let's look at Microsoft, Meta, um, so let's look at Microsoft, been crushed recently. Meta has gotten crushed recently. Obviously, stocks like Adobe gotten crushed, a lot of software stocks. Um, However, the index is basically at all-time highs. And so you can do really well by picking the right stocks, picking the right stocks, picking the right stocks, or you can do really bad. And so the alternative is, you know, index and chill. All right, guys, we've been going for over 3 hours now. I don't know if it shows you the live stream counter, but it's 3 hours and 8 minutes at this point. And I'm all done. It is Friday on the 250th anniversary of the United States of America. And I've got some other stuff I need to do before closing the day out. So I'm going to end the stream here. Thank you all for watching, hanging on, asking all the questions. And we will do it again soon. Appreciate you guys. And we'll see you on the next one.